Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
Surveillance. Good morning, everyone. Tom Keeney in New York, bank holiday in London. Right now, headlines coming out, and we're going to see images of this, we believe, at the 6:30 hour from Abu Dhabi. A plane of El Al of Israel flying to Abu Dhabi and will fly, the symbolism here moments ago, flying over Saudi airspace as well. In attendance, an American delegation. We'll have more on that here, we hope, in the next hour, maybe even in the next 20 minutes as well. Still with us, Russ Kosterich of BlackRock. We've been celebrating the performance of his global allocation fund. Russ, I've got to get your comments on the Powell sea change. Robert Samuelson, I've been waiting for him to write in the Washington Post on the shadows, the echoes of the 1960s inflation. Do you agree with Mr. Samuelson? There's a risk of stop-go inflation?
I agree that this is a major pivot by the Fed. I mean, we shouldn't downplay this. The Fed is evolving their reaction function in a very meaningful way. Look, it's not obvious to me simply because of that we're going back to 60s inflation. And the main difference is you think about the way the world looked in the 60s. There are two very big differences. One of which was demographics. In the 60s, you had the peak of that baby boom generation coming into the workforce. That was very inflationary. Today, you've got the exact opposite, an aging population. The second big difference is you think about all those companies we were discussing a few moments ago. They are creating a massive deflationary force. So it's not that I think inflation is dead, but the notion that we're going back to the 60s, I don't think that's clear simply because the Fed has moved to an average inflation target.
Well, I mean, I granted we're not going to go back to the mid-60s, and most of the conversations we have said that. But are you telling me in this wage environment that 3% inflation is acceptable to the American public? Well,
we're a long way from 3% inflation.
Fair,
and again,
fair.
There are other things keeping wages down right now. I mean, the obvious one is that we still have unemployment at around 10%. And while I think that's going to continue to improve, I would suggest it's still going to take many years before the labor market gets back to where it was in February 2019. And then you have longer-term factors, the decline of unionization, particularly in the private sector. Again, it's not that you won't see some uptick in inflation, but whether or not it's going to go to 3-4% in the near term, I would actually bet against that.
Okay, I mean, it's not going to move up here, but what is the call then for inflation? Clearly, the consensus call, folks, is that we may get some noise here, but that we get a real economic slowdown Q4, Q1. How does that affect inflation call, and then how does that fold into your equity portfolio?
Well, I think a couple things. I think if you're going to get, first of all, some of that inflation fall you're going to get are the mechanical effect of certain months falling in and out of the calculation. We do think you're going to continue to see the economy strengthen into the end of the year. So, apart from those month-to-month fluctuations, I think inflation continues to firm, although it's not shooting up. And if you look at the markets like the break-even markets or the swap markets, you've actually seen a fair amount of firming in inflation expectations over the last few months.
Well, I would say even, Russ, in the last 48 hours, I mean, I looked at the five-year forwards. Folks, that's just one measurement of inflation, and the U.S. is clearly breaking out. Are you suggesting it's a true technical breakout of
I think it's legitimate, but again, I would make a subtle distinction, which is part of what's happening is less that inflation's on the cusp of running away and more that people were overly pessimistic back in March and April and probably as recently as June. And what you're having is some normalization of those inflation expectations. People are starting to believe the Fed is serious and they're creeping back towards that 2% level, which at the end of the day is what the Fed wants to see.
I've got to go back to technology, Russ, the excellence of your portfolio. Can you acquire new shares of Apple and Amazon?
Can you, or do you want to?
Do you want to?
You know, without getting into individual names, we've actually been trimming our tech exposure a bit. And to be, completely clear, we're still overweight technology, we're overweight communication services, we're overweight tech-related names in internet commerce. But we have been trimming, and we've been trimming in favor of some of the companies I spoke about on the rail side or in different parts of technology like semiconductors. And again, the thesis is if you start to see a little bit of an improvement in the economy, that's going to give a bid to some of the more cyclical names. Now, I think you have to be careful here. Cyclical does not always mean deep value. And one of the things we're really trying to do is even as we move to that part of the market, stick with quality, stick with earnings consistency in companies that can maintain their profitability.
Is healthcare technology tilt or cyclical tilt?
Healthcare, I would say, is a technology growth tilt. Tom, as you know really well, that's probably one of the least cyclical parts of the market, although, as we learned during the recession, it's not completely without the influence of the economy. Healthcare looks to us to be, again, another place we'd like to be overweight over the long term. Again, to state the obvious, you're going to get some volatility around the election. The market's probably going to focus on the outcome in November as much for this sector as for any sector.
Russ, I look at all this and sort of the ability to stagger in. How many people are behind? How many people have been on the sidelines and missed this market? Quite
a number, and you see that in the cash levels. Up until recently, you saw that in the cash levels of institutional investors. And I get it. March was terrifying, and it wasn't the first bear market like that we've seen in the last decade. I think the challenge is, particularly for individual investors, this is not 2000. You can't simply get out of the market, park your money in cash at 6% and wait it out. People do need to put money to work. It doesn't mean taking unintelligent risks, but it does mean thinking about where you can earn a rate of return that's going to fund a retirement, whether you're a pension or a household.
Russ Kostritz, thank you so much, and congratulations to you and your allocation team at BlackRock on really sterling performance. Folks, the way we do this at Bloomberg, and I agree with this, is there's a 1-year analysis, a 3-year analysis, and a 5-year analysis, and they all have their place. We've been talking about it's just extraordinary 12-month return by Mr. Kostritz and his team. There's been others that have nailed it as well with tech ownership. As a center tendency, a 3-year study actually has a lot of value, I would suggest, over the 5-year study. Futures up 8, Dow futures up 45. Sports continues to try to open, to try to emulate what we saw in England with the Premier League. We're going to consider tennis. It is that time of year, the end of August and into September, where the U.S. Tennis Association holds court, not in my ute at Forest Hills, but out there on Long Island. Mike Dowles will join us here with an update on their challenges within the pandemic. This is Bloomberg. Stay with us.
Now, future generations of African children can live free of wild poliovirus.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Bloomberg Surveillance. I'm Rishika Gupta. Let's get your Bloomberg Business Flash. Is Nestlé's biggest acquisition yet in the health science field. The Swiss owner of Nespresso has agreed to buy Aimmune Therapeutics for $2.6 billion. That's almost triple its market value. Aimmune makes the first approved treatment for young people to help reduce allergic reactions to peanuts. Warren Buffett's Berkshire Hathaway is betting $6 billion on Japanese trading firms. Buffett has taken stakes in 5 of Japan's biggest trading companies, amongst them Mitsubishi and Sumitomo. Shares of all 5 companies rose at least 5% today in Tokyo. And China has thrown a wrench into President Trump's plan to force a sale of TikTok's U.S. operations. The Chinese government now claims it has the ability to block a sale to Microsoft or Oracle by imposing tighter restrictions on artificial intelligence exports. TikTok is reviewing the new regulations and thinks that they'll make getting a deal trickier. And that's your Bloomberg Business Flash, Tom.
Redika, thanks so much. It is a dynamic market, and you really see it with a new breakout of the steepness of the yield curve. Not out to new recent record steepness, but nevertheless buttressed right up above 60 basis points. The difference in yield between the 10-year and the 2-year. Why? Powell. Next. Adam Posen. Must watch, must listen. This is Bloomberg.
put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If you wanted to stay on the price level path that was established from 1995 to 2012, you could run 2.5% inflation for quite a while. You could do the calculations yourself, but the idea would be that, we're going to try to make up for past misses, but it's going to be in the judgment of the committee, and there are different opinions around the table.
It's possible that it will take a while to get to 2%. Technology-enabled disruption, in particular, are limiting the pricing power of businesses, and inflation has been muted for close to 10 years.
The gentleman speaking to Bloomberg off an exceptionally important speech by Jerome Powell that we saw a few days ago. You saw the market reaction. There still is market reaction of curve steepening, and of course everybody watching the inflation dynamics of the nominal yield, the inflation expectations, and then of course the residual, the real yield. Right now, truly one of America's authorities on this, one of the world's authorities, Adam Posen, with his public service at the Bank of England, is now of course running the shop at the Peterson Institute as well. Adam, I'm going to cut to the chase. This is a massive victory lap for Olivier Blanchard. He was half a decade, if not more, out front on this concept. What has Olivier Blanchard said of this historic moment?
I don't have anything public from Olivier to say. I hope you'll have him on to speak for himself, Tom. But I think all of us at Peterson and all of us have been engaging in monetary policy view this as a victory. That since maybe a decade ago, certainly since 2014, 2015, we've been asking the Fed and the other major central banks to recognize the reality that the inflation response to unemployment is much lower. It's meaning a flatter Phillips curve than they thought, that there is reason in distributional terms for equity as well as economic efficiency to push the economy hot, that the NAIRU was being too precisely incorrectly estimated and relied on too much. And we've seen in a series of steps from Chair Powell, Vice Chair Clarida, Leo Brainerd, and others, them moving towards this more reality-based monetary policy. I think it's a huge step.
The Latin phrases here are ex ante and ex post. Let's translate it on a Monday morning, which is, I think of the Georgia school, Richard Timberlake, Robert McTeer, and others saying, look, you've got to wait to see the evidence before you move. Is this a Fed that can actually get out front of events, or do they completely capitulate to an after-the-fact policy?
I think they are rationally deciding that being ex-ante oriented wasn't working. And the biggest thing you can take away from Chair Powell's remarks is this sense of pragmatism. And the only reason not to be pragmatic is fear of instability, which doesn't seem to be in the cards. I mean, remember, Tom, as you've said, as everyone has said, the Fed, as the quotes from the Federal Reserve Bank presidents you had on the clips, the Fed has undershot its inflation target, undershot its forecast for years. So the idea that somehow this ex-ante preemptive approach is working was a mistake. And I think there were others, including Charlie Evans of Fed Chicago, Larry Summers, myself, Olivier, who you mentioned, who were talking about things like wait till inflation appears. And as I cited in a recent blog post, the Nobel laureate Bob Solow was debating that in favor of experimenting on lower unemployment against John Taylor's rules back in 1997. And this argument's been there.
Yeah, and I really want to emphasize here, Mr. Evans of Chicago, folks, who's been extremely articulate in laying this out as a public official, obviously president of Chicago Fed. Adam Posen, to me, what's so important here is not so much the theory of John B. Taylor of Stanford, but the granularity and data dependence of Alan Greenspan and the idea of a measured approach. Should we fear being less measured?
No, I think if anything, this is a move back towards the Greenspan of the mid-90s, that you are increasing discretion. At the same time, you're increasing a commitment to what you're calling granularity, which is real world, real-time data. You can't do it totally without theory. You can't do it totally without some discipline. But the whole point of inflation targeting, which Bernanke, Laubach, Mishkin, and I argued now 20 years ago, was that it's trying to calibrate the right balance between discretion and rules and anchor your expectations through transparency, through a discourse with the public and markets about what's really going on. And that's, Greenspan wasn't great on the discourse part, but he was good on the rest of it.
We've been waiting.
And sorry, go ahead.
Well, we've been waiting for Robert Samuelson to publish, of course, at the Washington Post in his great one volume, a nice, good read on Walter Heller in the time of the 60s. And it goes to this phrase, stop-go policy, where, yeah, you're more ad hoc, you're more looser in your policy, but do we risk the stop-go volatility of policy that we witnessed in the late 60s into the 70s?
We risk it slightly, but I don't think it's a realistic risk, especially compared to what we've already seen, not a risk, which is the kind of secular stagnation and the lack of traction of monetary policy. And most of all, as Chair Powell, I think has rightly put it, or I rephrased Chair Powell, they left potential employment gains on the table for years for no good purpose. I mean, again, ex ante, ex post. Ex ante, you can understand why there were why those decisions were made, even though some of us argued against them. But the ex post is clear that they were leaving output, employment opportunities, convergence in real wages across racial groups on the table out of fear for inflation that didn't come. The issue is if this flips us into a high inflation world, if say the Phillips curve kinked, like my colleague Joe Gagnon and Kristen Forbes argued, it's pretty easy for the Fed to go back and raise rates. So I don't view this as that risky a path. People will say that, but ex post, they're going to find out it's not.
Adam Posen, right now, history is being made with an American delegation and Mr. Kushner on board. El Al 971 is well out over the southeastern Saudi peninsula, making the bank turn into Abu Dhabi. This is the politics of a fractious region hinged together by central banking and finance. Tell us about, not the integrity, but tell us about the solidity of the central banks of the United Arab Emirates.
I'm not an expert on that region, but I do know that they, together with the central banks in Bahrain and Saudi, they are professionally run. They are part of the central banking community. And they, of course, have been running this coordinated peg on the dollar. And this is where it all comes together, because you have the Fed continuing to anchor worldwide use of the dollar. The other way this Middle Eastern issue comes in, though, Tom, is the U.S. government, increasingly under Trump, but also with Democratic use and encouragement, keeps overusing unilateral financial sanctions. And if they keep doing that, you overuse it, then you incentivize places like Saudi, like the UAE, not to mention China and Russia, to get out from under the dollar and out from under the U.S. financial system. And that's going to be something to watch in coming years. The Fed can make it attractive to be in the dollar, but the U.S. government abusing the role of the dollar and overusing sanctions can make it very unattractive. And that's when you start getting alternatives being put forward. Go back to Carney's speech at Jackson Hole a year ago.
Dr. Posen, thank you so much. Always informative. Adam Posen of the Peterson Institute there. And I really can't say enough about their intellectual effort at the Peterson Institute. As I said earlier, Olivier Blanchard just way out front on this idea of a little more inflation within the system. We are monitoring El Al 971. I'm watching it on FlightAware. Thank you to the FlightAware people for helping me really see this in real time again. To describe this to you, many of us know Dubai. Dubai doesn't have the oil. Abu Dhabi does have the oil. It is a 60-mile straight line. I'm going to call it southwest. I get my directions in UAE messed up, but a 60-mile straight line from the tip of Dubai, pretty much the tip, back down to a very prosperous Abu Dhabi, and that's where El Al will land. If you know the airlines, Emirates associated with Dubai and Etihad associated with Abu Dhabi. And we'll look there. We may have some images coming up of Mr. Kushner and the American delegation at this historic moment. Right now, with our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. President Trump called for law and order in a tweet storm following the death of one of his supporters in Portland, Oregon. The man was killed in a clash between Trump supporters and Black Lives Matter demonstrators. Video showed some members of a Trump caravan that rolled through Portland shooting what appeared to be tear gas and paintballs. Some Democrats say the president encourages unrest because he sees it as a plus for his campaign. President Trump's intelligence chief is defending his decision to restrict congressional briefings on foreign interference in U.S. elections. John Ratcliffe says he'll primarily brief through written materials, but he ruled out what he called all-member briefings because of the threat of leaks. Democrats say Ratcliffe is only doing President Trump's bidding. And the head of the U.S. Food and Drug Administration promises transparency when it comes to reviewing potential coronavirus vaccines. Stephen Hahn tells Bloomberg that data will dictate what kind of decision is made. President Trump has accused the FDA of slowing vaccine and drug work to hurt him politically. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
All right, Ritika, thanks so much. Coming up, Joshua Sharfstein on the pandemic. Certainly a better news for the U.S. and particularly the New York region. It's outstanding as well. Futures up 8, Dow futures up 36, a VIX 24.23. This is Bloomberg. Good morning.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Bloomberg Surveillance. Good morning, everyone. Tom Keeney in New York. London off today. Francine Lacroix off. Anna Edwards off. It's an outrage. Bank holiday, FTSE closed. Thrilled to be with you on this Monday morning with really huge news flow going on right now. What an interesting weekend with cooler weather finally descending on New York and everyone across this nation and indeed around the world reassessing where they are in this pandemic. To give us assistance, Joshua Sharfstein is with Johns Hopkins, the Vice Dean of the Bloomberg School of Public Health. Of course, this is Michael Bloomberg, the founder of Bloomberg LP and this radio and television property as well. Dr. Sharfstein, a few ideas here. First of all, it is back to school. I've been thunderstruck by the different responses school to school. Has that surprised you?
It has been pretty remarkable, and that's both at the K-12 and university level. You see universities doing very, very different things, some all online, some everybody back, and really the same at the K-12 level, a huge degree of diversity.
I look also at the statistics. I happen to look at John Burns Murdoch and the FT with a wonderful work, including Johns Hopkins data as well. And just to look at New York, and there's many other successful stories of declining cases and certainly deaths remarkably diminished from where they were. Why aren't we opening quicker if we see such good statistics and trends in statistics?
Well, I think in areas where the case numbers have come way down, it really is possible to open, but open with precautions. I think that's still the lesson from around the world. And I think people are, in many cases, kind of debating about the precautions, about what's practical. But I think it should be possible, and kids really do need to go back to school, the young kids. So I think it's the right thing to do in areas where the caseload has come down. There's still a lot of parts of the United States where that has not happened, and reopening is not necessarily the easiest thing to do.
Certainly we see better statistics, folks, in Texas and Florida, but a long way from the quietude of New York right now. Joshua, the other idea I see is the effect of the pandemic as we go into the colder season. Again, a chill across New York this weekend versus the 90 degrees we've been seeing. Do you buy the weather dynamic that our listeners, our viewers should be concerned of an October flu season overlaid on the pandemic?
Well, I hope everyone is concerned, because maybe people will take, a lot of precautions for themselves, because that's what we need to do regardless of whether there's a weather dynamic. I mean, I think it's hard to say. It may be a little bit easier to transmit in the cold weather, but just like we saw it being a little bit harder to transmit in the summer, and we had these huge outbreaks over the summer, I think what's going to matter a lot more is just how people behave. So if people are a little bit concerned about it and they take more care, then I think everybody will be better off. And I think we may even see fewer flu cases.
I mean, Dr. Sharfstein, it's fascinating the difference between America in the debate here versus any other nation or culture. Does America have the backbone to put in the strict ideas that get us back to an economy while we wait this pandemic out, while we wait for a vaccine? Do we have the sense of rule and the will towards rules?
I don't think we've had the leadership to do that, candidly, and I recently wrote a piece in Foreign Affairs about this, but, I think that when people hear very mixed messages, and we have been hearing mixed messages, not just about the pandemic and whether it's over, but about what to do to protect yourself, like wearing a mask, then it's just really, really hard to get to that place where people are committed to doing what's necessary to protect the to get the cases down and then have a much more stable economic recovery.
Joshua Sharfstein, thank you for the brief this morning, and particularly thanks to you and all at Johns Hopkins for all the different work you've done for us and making us more informed over the last number of months. Futures up 8, Dow futures up 30. We greet the morning. Stocks up without question. Mr. Buffett changing the dialogue with his investment of $6 billion plus into the 5 trading houses of Japan. That barely describes their effect on Japanese society. Chris Morangi of Gabelli in the 9 o'clock hour of Bloomberg Radio. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. I'm Rishika Gupta. Let's get your Bloomberg Business Flash. The U.S. airline industry is coming up with ways to get more travelers on board. United Airlines has put an end to its much-hated $200 change fee for domestic flights. Meanwhile, American Airlines is adding service to warm weather destinations such as Florida and Mexico. That's after cutting flights in October by 55%. China's biggest banks have suffered their worst profit decline in more than a decade. The problem, a cascade of loans to businesses that are going bad. Profit fell at least 10% in the first half of the year at the four biggest Chinese banks. Loan loss provisions rose as much as 97%. And Ant Group's potentially record-sized IPO could propel tech capital raising past the heights of the dot-com bubble. Jack Ma's financial titan aims to raise at least $30 billion in October. That would push first-time share sales by tech firms to the highest since 1999. Investors have been piling into tech despite global uncertainty. And that's your Bloomberg Business Flash. Now, Etsy is amongst the e-commerce brands that's seen a surge in demand during the pandemic. The company has also played a role in getting masks produced. Etsy CEO Josh Silverman spoke with Bloomberg's Scarlett Fu as part of the Cornell Tech at Bloomberg series.
There was a hole in the law where, you know, if something goes wrong, there's an understanding of liability that the person who sold it to you is liable if the product malfunctions. And so in an online marketplace, what is the definition of a retailer? Is it Amazon or is it the individual merchant on Amazon, for example? And so there was a court case in California that settled that said if it looks like a duck and smells like a duck, it's a duck. So for Amazon, Amazon picks the products, warehouses the products, ships the products in an Amazon box that arrives in an Amazon truck, and that in Amazon's case, it's a duck, it's a retailer, and that Amazon should be strictly liable for that. And so what Amazon did is it turned around and it took a bill that it wasn't supporting in California and threw its full force behind supporting this bill to say now every marketplace should be responsible, should be strictly liable for every single thing sold on its marketplace, meaning Etsy in particular and eBay should have the same burden that Amazon does. And of course, Etsy and eBay, if we were in that same court in California, the judge, we think, very likely would have ruled differently because we don't warehouse the products, we don't fulfill the products, we don't pick the products. We're very, very different than Amazon. We're truly peer-to-peer. But what Amazon is doing is saying, wow, this is mildly inconvenient for us, but it's so expensive and so difficult for a company like Etsy that it would be crushing to Etsy. So by embracing this law, we can put Etsy in a very, very difficult position and hurt the 3 million small businesses on Etsy that are trying to compete with Amazon. So I think this is really about making Amazon stronger on the backs of the small entrepreneurs.
It sounds suspiciously like when Amazon was once against, as opposed to states imposing sales tax on Amazon purchases, and then at some point turned around and embraced it completely.
exactly like that. I think even more dangerous because the costs of this, in terms of just frivolous lawsuits, suddenly you've got a deep pocket to go after. So you can raise a frivolous lawsuit, which costs $50,000 or $100,000 to make go away, which times, thousands of frivolous lawsuits is a tremendous amount of expense, all of which would have to get passed along to the consumer. And again, right now, anyone can open a shop on Etsy for 20 cents. And if strict liability and frivolous lawsuits come about, obviously it's going to become much more expensive to open a shop. And that's going to shut many, many people out of this ecosystem. And we think that's terribly unfortunate. So this is much more nefarious, I think, even than the state taxes were.
It must be so frustrating because you're a platform, and when I see your platform, you're kind of more eBay than you would be Amazon, which sells its own stuff, packages everything under its own name, operates warehouses, and of course is a logistics monster. And it's frustrating to be defined, I'm sure, relative to eBay or Amazon. Yet at the same time, you've got Amazon kind of leading the way in terms of not writing the rules, but maybe guiding rule making in parts of the country. How frustrating is that for you?
They have a lot of power in a lot of areas. And I think the world wants alternatives to Amazon. I think the world is begging for alternatives to Amazon. So I think the fact that Amazon is pushing forward a bill like this at a time when there's so much scrutiny about their market power is, frankly, a little bit shocking.
Etsy CEO Josh Silverman there with Bloomberg's Scarlet Fu. Coming up next, more Bloomberg surveillance with Tom Keene and Lisa Abramowicz. The show is simulcast on radio and television. They'll be analysing the latest market moves. Guest highlights include Peter Cheer of Academy Securities and Sebastian Page of T. Rowe Price. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David West. Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Certain logic in the market doing better than the economy here.
They're going to keep rates at zero for a really long time, maybe forever.
We're looking for a continued improvement in the economy, but the pace will probably slow down now that we've had this quick rebound.
The Fed has been thinking about changing its monetary policy framework for quite some time.
This is a secular downtrend in the dollar that could be 10, 15, 20% over a 2-year period.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene simulcast on a Monday, the last Monday of the summer, as we stagger on forward to Jobs Day on Friday, and then Labor Day, I believe, is the next day as well. That Monday following here as well. John Farrow still off. Somebody said, "Where's John?" And I noticed that they're playing football today in the Netherlands. I thought maybe he ran up from Tuscany to the Netherlands to watch DGF play or something like that, Lisa. We hope Mr. Farrow's well. He's sort of going incognito on us. Lisa, the market still reacts to the Powell speech.
I gotta say, August is normally a sleepy month.
Yeah.
This has been extraordinary. The best August for the S&P since 1986. The biggest increase in 10-year yields on a monthly basis going back to January 2018, and for 30 years, this is the yield curve steepening, the biggest gain since 2016, Tom. So anyone saying it's a sleepy August, not so much.
Curve steepening out over 60 basis points. We'll do some data with a moment. Lisa, I've really had to brush up on my Japanese reading on these trading companies, going back to the Meiji Restoration and then on before World War II, the re-advent of them in 1955. And Mr. Buffett buys in today. To me, this is a big deal.
It is a big deal. $6 billion investment into these 5 brokerage companies in Japan. I'm wondering, how much is this a diversification away from the United States? I mean, is that the real story here, that Warren Buffett, the stalwart of United States investments, is shifting an increasing amount of his portfolio overseas, Tom?
Maybe 90 years old, and we celebrate his birthday as he did by buying Japan. But to me, Lisa, it's almost just finding value. I mean, when you see folks, you bring up on the Bloomberg what some of these trading companies are doing, and they're trading at 10, 11, 12 multiples. They're trading way under the value, and I understand there's the goofiness there, but they're trading way under the valuations of America. So we've got a lot going on. Futures again up 8. Lisa, you have a morning brief.
Yeah, looking forward to 9 a.m. Eastern time. Fed Vice Chair Rich Clarida is going to be speaking at a Peterson Institute event, extrapolating on this sort of new regime of the Federal Reserve. Curious to see what tools he may outline that the Fed has to juice inflation. After market, we get the new economy earnings. Zoom Video Communications reporting second quarter reports. Just to give you a sense, their shares up 340% year to date. And also later today, former Vice President Joe Biden expected to speak in Pittsburgh on the violence that we've seen, the deaths in Portland, in Kenosha, Wisconsin. Interesting to see how he frames this as the whole law and order type of argument really becomes front and center, Tom.
Well, an eventful weekend for both candidates, and we'll have coverage on that through the week and, of course, into the fractious September that is ahead. I do want to point out renminbi. We have a further strengthening in the Chinese currency. Lisa, it's off the radar, but nevertheless, 6.85 yuan per dollar is a long way from 7 per dollar.
Well, and this is on the heels of some better than expected data overnight, and we shouldn't undersell this. The whole services outperformance in China shows that the recovery is on track. How much steam will that give globally at a time of so much uncertainty?
I also want to mention, before we get to Eric Stein here, that we are monitoring El Al 971, this historic flight from Tel Aviv down to Abu Dhabi. The distance is somewhat equivalent to New York to Dallas, but the history being made here is extraordinary over Saudi airspace, and with FlightAware, I can note that the 971 LL straddles the southern border of the United Arab Emirates, now ready to make that turn into AUH. Right now, we make a turn to the markets with Eric Stein of Eaton Vance, our co-director of Global Income. Eric, how has Eaton Vance adjusted and adapted to the new fixed income regime brought on by the Powell speech?
Well, first off, Tom, thanks for having me on. Look, I think we Vance has thought a lot about Fed policy, going forward, and really this transition phase that I think has been accentuated by the Powell speech. So, if you go back 5.5 months or so ago, middle of March, we're in the worst part of the, panic related to COVID-19, and the Fed just focused on getting markets functioning. Well, clearly, markets are more than functioning for the most part, and so now they've really just transitioned to focused on the medium term, focused on the real economy, focused on getting inflation expectations higher, and focused on telling markets that they're in no hurry whatsoever to raise rates. So I think, I think this is, good for a weakening dollar. So we like emerging market debt. We like non-dollar currencies. I also think, inflation break-even should go wider from here. They've certainly rebounded a lot again off the March lows, but I think the Powell speech, and we'll see what the other Fed policymakers have to say this week, is just going to encourage, more and more dovish policy with various tweaks.
Great. How do you manage price down and yield up? It's always a mystery to me. How do you manage that at a venerable house like Eaton Vance?
Well, you could buy a floating rate instrument. There are certain parts of the mortgage-backed market that actually, when yields go up, particularly when the curve steepens, expected future mortgage prepayments fall, so that helps certain types of mortgage-backed securities. Again, you can play in non-dollar securities. So yeah, for traditional fixed income that has duration, I don't think being at the long end of the yield curve right now is where you want to be. Just given that this Fed policy is really, to me, trying to have a steeper curve. Right after the speech, we had a bear steepening and yields sold off, and then a bull steepening a little bit on Friday, but still a steepening nonetheless. So I think the long end of the curve will continue to react to increased inflation expectations.
So where do you go for income? Is it stocks?
You could go to stocks, but to me, you could also go to, I think corporate credit markets, so high yield and floating rate bank loans offer, good solid value. They've clearly rebounded, significantly from March. I think you're more in a kind of clip your coupon type environment. You got to be selective in those markets. Again, emerging market fixed income yields are low everywhere, but I think if you want to play on a weak dollar, that can be good as well.
Eric, we're seeing a rotation. Initially, people were betting on the highest rated of junk bonds, the idea that you're looking for safety but income at the same time. You've seen a shift over the past few weeks toward the lowest tier of junk bonds, the most vulnerable to default, saying, look, at least there's still income there. Are you among those doing that?
Yes, I mean, on specific questions, I'll defer to my colleagues at Eaton Vance. We have a great high-yield team, so I'll defer to my colleagues on that. But I think it's quite natural just thinking of kind of how markets evolve. So, when you first have everything sells off, the narrative, again, in late March into April was let's go up in quality. Well, now yields have come down everywhere, and so to meet a certain return target or return bogey, I think it's natural for people to go out the yield curve a little bit. At the same time, I think it's important to be selective in credit markets. Clearly we've seen a massive structural transformation in the economy because of COVID-19. Even if we get a significant recovery, a lot of sectors are going to be hurt, differently, I'd say, than others. So you need to be selective there.
We're speaking with Eric Stein of Eaton Vance, and when you talk about yields higher, the idea that now is not the time to invest in duration in the longest dated bonds, how high could 10-year yields, 30-year yields get without necessarily getting a sell-off in risk?
Yeah, excellent question. I was actually talking with one of my colleagues probably a week or so ago, and saying you could maybe get another 30, 40 basis points, and that was maybe 10, 20 basis points ago before it really affects risk assets. And I do think at some point, the Fed obviously has kind of poo-pooed a little bit yield curve control, so I don't expect to see it at the September meeting. And even when they've talked about it, they've been more focused on the front end than the long end. But if yields were to sell off and then that were to feed through to a negative impact on risk assets, at some point maybe the Fed wants to would reconsider yield curve control. I don't think we're there yet, but that's always possible.
I'm glad you two are bringing this up because, folks, this is the massive conundrum. They want inflation, but they want to control the yield curve. I believe on CFA, Eric Stein, that's called have your cake and eat it too.
Yeah, I think that was question 7, answer B. But no, I mean, to me, Tom, it's exactly what they're trying to do in terms of get real rates lower. So keep nominal rates anchored. They're going up somewhat now, and get inflation higher. But you really have to be incredibly aggressive in the market, and there's clearly second order ramifications from doing that.
Now, I'll give you second order ramifications. Look, we can't even get the school supplies right for our kids, let alone figure out how to manage nominal yield or inflation expectations and the residual real yield as well. What's your call, Eric Stein, in the nominal yield? Are we actually going to get out over a 1% 10-year yield?
Look, that's 25 basis points. We could, but I do think at some point the Fed will step in. To me, it's really what's the delta on the economy. So we know Fed policy, and I think some of the rebound in yields that we're getting is related to economics and the path of COVID. So if clearly still a problem here in the U.S., but versus a month ago, new cases and whatnot don't seem to be as big of a problem as they were a month ago. We'll see what happens, as we get into fall, back to school, weather getting colder, people indoors. If that gets worse and you don't have a vaccine, that's going to also move yields. So the Fed's not the only game in town in terms of what's going to drive Treasury yields.
Eric Stein, thank you so much. With Eaton Vance, Lisa, the only game in town is everything with a price on it's gone up. Am I missing something?
Well, clearly you are, because the Fed is saying that they want to increase inflation and that they're concerned about how low inflation is. The price of everything is going up, and yet people are saying, where is inflation? I don't know, but if you go out and you go to the grocery store, you see it.
Well, you see it at the grocery store, but I think it's much more pernicious than that. I mean, have you survived back to school supplies? Remember, it was easy. You got them at Crayola 16 and threw them out the door.
Yeah, now you buy an iPad as well as a Chromebook as well as AirPods. My question is also, how much are you seeing this, Tom, where you go out to dinner and the portions are smaller? They're skimping on some of the other products. You're getting less for the same price, and you're seeing that increasingly. How does that translate into inflation?
Lisa, I was out this weekend, and I looked at the #2 value meal, and I swear hamburgers
that is so inaccurate. I am going to call BS on that right here. You are not eating at McDonald's. But yes, I'm sure that the Big Mac is a little bit reduced in size.
Afterthought bribes me by when she does the seamless McDonald's thing. As always.
What does she bribe you with? Chicken McNuggets?
#2 value meal. Downsized, as Lisa Bramwitz correctly puts it. This is really true, though, folks. In the restaurants of New York, I really saw the bustle Saturday night out in the streets as the restaurants try to survive. We're going to survive with the futures up 9. We have good news for you. Peter Cheer will join us with Academy Securities. This is always a timely interview. Stay with us. It's a simulcast. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Joe Biden has accused President Trump of fanning the flames of hate and violence. Biden spoke after a Trump supporter was shot and killed in Portland, Oregon, after a clash with those protesting the shootings of black men and women by police. Biden called the violence unacceptable. President Trump called his supporters great patriots. He and administration officials blamed the violence in Portland and other cities on Democratic officials. President Trump is praising Shinzo Abe as Japan's greatest prime minister ever. That's according to a White House readout of a call between the two leaders. The president spoke to Abe 2 days after he announced he was resigning for health reasons. President Trump told Abe that the U.S.-Japanese relationship is better than it has ever been. And Warren Buffett's Berkshire Hathaway is betting $6 billion on Japanese trading firms. Buffett has taken stakes in 5 of Japan's biggest trading companies, amongst them Mitsubishi and Sumitomo. Shares of all 5 companies rose at least 5% today in Tokyo. And another sign that China's economy is rebounding. One gauge of the services industry hit the highest level this month since early 2018. The manufacturing index slipped slightly, although factories reported that new orders were up. And in Belarus, thousands of protesters again gathered to demonstrate against President Alexander Lukashenko. The European Union is now calling on Lukashenko to hold new elections. The EU has rejected his claims of a landslide victory earlier this month, and they criticized the police crackdown on dissent afterwards. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
We brought up the number. I had a conversation with Speaker Pelosi, and even on her $2.2 trillion counteroffer, she can't tell the American people nor me what is in that. I can tell you what is in the offer that the president has made and he's willing to sign. She puts forth a number, suggests that she came down, and yet she's willing to turn down $1.3 trillion of help that goes to the American people.
Mr. Meadows there on Meet the Press with Mr. Todd this Sunday as well, an eventful Sunday set of talk shows. Hear many of them on Bloomberg Radio. Thrilled to do that for you in the afternoon. It's hugely, hugely popular. We stumbled on that idea. I was like, oh, people really care about the Sunday talk shows. As does Kevin Cirilli. He's gone through the detox post-convention. He's back with us for a normal political season. Right. Kevin, I look at the stimulus and the need. Give me a reason why either party really wants a signed document. Are they just going through the motions?
No, I think two things. First and foremost, there's a lot of increased pressure given that many individuals down in the Gulf Coast need some type of assistance, federal assistance coming from Hurricane Laura, but also the anticipation that this is something that down ballot races, not just Republicans, but also Democrats who are up for re-election on November 3rd would like to see there come to some deal. But there's a fascinating tension, Tom, that's unfolding here, and that's the history, and really it's a history, between Speaker Pelosi and now the president's chief of staff, Mark Meadows. Remember, he's one of the founding members of the Freedom Caucus, which the left completely looked down upon when they first ascended. And now Speaker Pelosi's worst ideological nightmare, she's having to negotiate a deal with. And so it's a very rich history.
Yeah, but where's the number going to come in? I mean, I still don't understand how it benefits Mr. Biden or Mr. Trump to get a stimulus done. Don't they just jawbone it forward and all of a sudden it's October and we're gone?
Well, you know, I think when you look at it through the lens of politics, yes, I mean, to some extent there really is no incentive. But from the lens of people hurting and people needing there to be some relief, especially as there seems to be so much uncertainty surrounding school closures and whatnot, then I think that there's a large incentive to get a bill through.
Where are we, Kevin, in the silly season, as Tom would put it, of presidential elections? Where are we with respect to polls?
We're in the middle of it.
Okay. All right. No, I mean in terms of who's leading and the swing states. What are you seeing?
Well, the president got a bounce out of the Republican convention, just significantly a single-digit percentage points in battleground states as well as in national tracking polls. But the second point that I would make is that on the issue of law and order, which prior to Kenosha the president had been leading on, that has really been something that the Biden campaign has sought to make sure that they're telling their policies in a more clear way. You saw the Biden campaign come out with statements condemning the violence midweek last week. That's something that the Republicans feel that they have the upper hand upon. And then on the issue of the economy, from that vantage point, whether you're talking about tax cuts or you're talking about reopening, that's something else that the Trump administration feels that they're ahead upon in that debate.
Well, Kevin, we're going to be hearing from former Vice President Joe Biden later today in Pittsburgh, where he's expected to give some sort of statement on the law and order issues. Why is the economy not still the lead issue, or is it?
It is. It is the lead issue, and I think for millions of Americans, and the polls, even that have come out in the past couple of weeks, still rank the economy as the #1 issue. For the Biden campaign, he's appearing in southwestern Pennsylvania because that's the portion of the state where the president overperformed. It wasn't outside of Philly; it was Pittsburgh, and so this is he's going there to try to pick off some of the more Rust Belt type of voters, because if he wants to win Pennsylvania, he's got to make up ground there.
I do not make light of it, Kevin. The Law and Order score right now. Who won the weekend, and what is the to-do list for Trump and Biden on Law and Order on this Monday?
Well, I think it's they have to figure out how to talk about this, and for the Trump campaign, they have to figure out a tone that will address law and order, but also speak to the real racial inequality in the country. For the Biden campaign, they have to make sure that they are out to continuing to condemn the violence and calling on there to be a de-escalation of violence. So those are the two hurdles that each campaign faces this morning.
But Mr. Biden, the criticism is he's been in the basement and maybe he's being quiet and letting Mr. Trump tweet, et cetera, et cetera. Do you sense a shift in the Biden campaign this week? Is that something we should look forward to or anticipate?
Yes, just the fact that he's going to Pittsburgh, I think, is an indication that he has to get back out on the campaign trail. And this is a strategy that the Biden campaign has deployed ever since January 30, the end of January, when the president restricted travel from China, in terms of taking a much more a wait-and-see type of approach in terms of their comments. So it's not just on race. We also saw it on the coronavirus in terms of their comments and how they've been much more calculated or measured, depending on which party you're in, for their responses.
Kevin Cirilli, LL 971 descends into Abu Dhabi with Mr. Kushner, I believe, on board. Explain this moment for Jared Kushner and his father-in-law.
Well, Jared Kushner is coming off of, without question, the most significant policy win in his career in public service. If you look at the normalization of ties between Israel and the UAE, that is a monumental breakthrough. It received praise from Obama State Department officials, and I'm hearing from my sources that there will likely be a mid-September ceremony at the White House. It's unclear if MBZ will be attending. We should also note the itinerary of Kushner's trip. In addition to going to the UAE, they will also go to Bahrain. There's a lot of speculation about whether or not Bahrain will be, in fact, the fourth state to join in normalizing ties with Israel. Then they will be going to Qatar. The Qataris, of course, have a rich history with UAE, particularly as it relates to foreign policy and their own relationship. And we should also note that as a part of that normalizing of relations deal, the U.S. had agreed to sell some military equipment to UAE. That's going to raise some concerns from the Chinese. So it's a massive policy breakthrough, regardless of what party you're in, and it's a restructuring of how the U.S. is going to look at the Middle East.
Folks, right there is a vignette on a Monday morning of why Kevin Cirilli is our chief Washington correspondent. I ask a question and you get a wonderful, concise brief on what's going on in the Persian Gulf, or the Arabian Gulf, as it is sometimes called. We anticipate the landing of LL 971 at Abu Dhabi. We'll see when that occurs. We're believe somewhere in the vicinity of 7 o'clock Wall Street time. Lisa Abramowitz, this is truly historic for Israel and for the United Arab Emirates.
Yeah, and it shows some sort of thawing of tensions at a time when so much of the world, you're seeing the exact opposite, Tom.
Really interesting to see. Futures advance up 10, Dow futures up 61, equities bid. Again, Mr. Buffett investing, believing in Japan. Coming up, Peter Cheer, Academy Securities. Stay with us on a simulcast. Good morning on Bloomberg Television and Bloomberg Radio. This is Bloomberg Surveillance.
we are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with a 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Bloomberg Surveillance is simulcast. Good morning on Bloomberg Radio across this nation. Good morning on Bloomberg Television worldwide. Thrilled you're with us. A simulcast. Lisa Abramowitz and Tom King. Jonathan Farrow, deserved extended sabbatical. Some form of retreat, Lisa. I think he's retreated. You know, it's like Sean Connery in one of those Italian movies from years ago.
He's on an adventure, no doubt, and a lot of people, frankly, he's joining the crowd, right? How many people are going to return from summer vacation?
Only you and I are dumb enough to be here. That's all there is to it. Lisa, I want to talk about supply-side disruptions, and some of them are public service. You noticed in your reading over the weekend just some of the city services around this nation challenged given the pandemic.
Yeah, you're getting less for the same amount of money. When it comes to public services, there's been a huge uproar over garbage collection and the lack of it across the nation, and how this is a public health hazard and it's creating issues for neighborhoods. Again, a lot of municipalities just don't have the money to collect the garbage, which raises yet another question. When is Congress going to sign off on some sort of aid package that can get some of these services back up and running? Tom, a huge issue.
Yeah, it's a huge issue. And of course, Kevin Cirilli moments ago telling us it's an issue that will be discussed, maybe signed upon, but don't hold your breath as well. There are so many events going on right now. We're going to dash to our next guest. Peter Cheers with Academy Securities, head of macro strategy, and he's the guy you hate because he put out a 3-page memo, and you know you have to read 2.8 pages of it. It's not like you can get by with reading one paragraph, and we're thrilled he joins us this morning. Peter, I've got to go to your outlandish call on the enthusiasms of stock splits. You're way too young to remember the actual idiocy of stock splits from years ago. So, for instance, if Amazon gets the disease and they do a 10-for-1 split, you're suggesting this could drive the Dow to something in the equivalent of Dow 32,000. Discuss.
To me, it's been really shocking the impact that we're seeing on the market from these stock splits. In theory, stock splits shouldn't be worth very much, especially in this day and age, right? You can buy a single share, you can buy fractional shares, people buy ETFs, and yet Apple and Tesla have performed phenomenally well since they announced their stock splits.
Well, just that, but Salesforce.com, the Benioff franchise, doing well, just going into the Dow. I mean, this stuff is all old school, and we're told old school doesn't matter, but you're telling me old school still matters.
It seems to be mattering right now. I don't think it should matter. I've clearly been wrong for the last few weeks. You watch Tesla, you watch Apple. Today's going to be a real test of whether it matters or not. And I do think this whole new day trading crowd, and whether it's the Robinhood crowd, all these day traders who really like to trade weekly options on top of it, have had a huge impact on the market.
That's Lisa. Lisa, I just figured it out. Peter helped us there.
Oh, did he?
That's what Pharaoh's doing. He's just sitting on his couch at home, day trading.
Day trading. I loved it. Honestly, Leon Cooperman put it the best. He was like, last I checked, when you cash in $5 bill for 5 singles, you don't get more money. And it seems to be that some people think that they're getting more money with these stock splits. Is this an indication of froth?
I think it is an indication of froth. I will wait. I want to see how things trade today and tomorrow as kind of people realize all they got is 5 shares instead of 1 share, and it's, 1/5 the value. And we'll see if that actually impacts the markets. I think this is going to be a sell than use, so I think we're going to see some weakness. I think people are going to realize this hasn't helped as much as people seem to have bet on. On the other hand, if Apple and Tesla do well today and tomorrow, I would expect a bunch of companies to do splits. Why wouldn't you do a stock split if it seems to help and there's really minimal cost to doing a split?
So this has been the conundrum. There are signs of froth in places like the stock splits, perhaps the SPACs, in some other areas. The fact that the likes of Walmart jumps on any rumors of them being a part of the TikTok bid, but they don't retreat if there's any headwind to that bid. And yet other people are saying these companies are getting rewarded for doing the best in a very difficult time. Which is it? I mean, do you see momentum building on itself because the strong companies are in the leadership? Or do you think this feeling of froth, this feeling of irrationality will drive things going forward?
I agree the fact that the companies that are winning, when you look at the story, they do have the best stories. I do think it's become a little bit stretched. I also think something that, people have been talking about, the breadth of the market's very weak. Right now, there's only a few stocks driving it. I do think part of that is the one side of the Tesla story is Tesla might go in the S&P 500, so that would be very good for Tesla. I don't think what gets talked about right now is the other 499 or so companies that are in the S&P 500, I think are lagging because those would have to be sold. So I think we need some clarity what's going on with Tesla. And then really, I think when you start looking at the factors, I think one thing that's just driving this that doesn't get enough attention is we're at very negative real yields. Negative real yields are helping a lot of these companies, especially the ones on the strong growth trajectory.
No, I don't mean to interrupt, Peter, but that's right where I wanted to segue to, which is the idea of negative yields. Is it about negative real yields, or is it just a crushingly low nominal yield rate that's helping people out?
I think we've shifted from, clearly the nominal rate is great, but when you look at this, not only is the U.S. Treasury issuing at negative real rates, a lot of companies are actually able to issue 10-year debt at negative real rates, right? Apple trades tighter than the spread. So Apple, for example, is able to issue at negative real rates. Other companies are. We're actually encouraging all the corporations we work with to issue right now. This whole phenomenon of negative real rates way out the curve is highly unusual.
Okay.
I think the Fed's going to try and change that.
What are they going to do with all that money? Because what we hear interview after interview is the mass of money on the sidelines. Witness Mr. Buffett's challenge. Of course, he goes out to Japan today. But, I mean, people got to get creative here with all that money, including debt issuance.
Yeah, I think you're going to see continued stock buybacks. You might see some, pickup in dividend, though dividend stocks haven't been rewarded very much. And maybe you start seeing this M&A that we've been waiting for. I think people have been talking about the potential for M&A. We haven't seen much of that. Maybe that's where that cash on the sideline goes, which again, I think would be great, but I think it's going to help the underperforming stocks. That's where the M&A is going to come in to pick those stocks up. So I do think we're going to see a rotation in the market away from some of the big tech leaders. We're going to see less negative yields as yields start creeping higher. And then we might see that finally that rotation into the, stocks that have underwhelmed for the past 2 months.
Are we going to see a rotation out of the United States into the likes of Japan?
I think Japan, I think Europe looks interesting. I think some of these countries are dealing with COVID reasonably well. So I think that's where you are going to see that rotation. And especially this dollar weakness, I think, is a growing concern where foreign investors aren't doing as well on their dollar investments because the weak dollar's done so.
And that's actually where I wanted to go, the idea of Warren Buffett, and Tom was talking about this, his bet, the $6 billion bet on Japanese brokerages. How much is that a wager on the Japanese economy? How much is it a wager on the yen or a hedge against the potential dollar weakness going forward?
I think a decent amount is against the dollar, right? So I've actually been looking at European financials, for example. I like European financials. I like U.S. financials. But I think with European financials, you get that extra kicker of a potentially strong euro.
Peter, this is just breaking, folks, across the Bloomberg. Paul Podolsky has just published for Bloomberg Opinion, and he completely reaffirms the sheer view as well. Podolsky, to me, is legendary in terms of not losing money. Paul Podolsky, to quote exactly, Peter says, "I'm maintaining a long exposure to fixed income and risky assets. Negative real rates are a rare policy opportunity." What's your level of opportunity, Peter, into the new year?
I think you're actually supposed to be going the other way and starting to sell some rates. I think the Fed is going to aggressively push for inflation. I think there are going to be signs of them being successful. So I think we're finally going to see the 10-year and 30-year bonds rise a little bit in yield. So I think that's going to occur. And then I think financials are a great place to be.
But dovetail, okay, I get the financial angle, but dovetail that into your outlandish equity call of XPS 4,000, Dow 32,000. You sound like Jeremy Siegel down at Wharton.
Well, let's not go crazy. But on the other hand, I do think the optimism is going to be post-election. We can start implementing policies to really bring jobs to America, where we start rebuilding our manufacturing base. We're never going to go back to a full manufacturing economy, but I would love to see some of the jobs that we've lost return not as service jobs again, but as manufacturing jobs. I think both parties are talking about that. I think we are going to see a push towards more manufacturing in the U.S., and that's going to be the surprise, I think, into next year, is that the economy will recover from COVID, and it's going to be a more interesting economy than we had pre-COVID, because there will be a manufacturing base, and there will be more middle-class type jobs.
Peter, just to wrap things up, do you expect any asset class to see a significant decline in the near future?
No, I think we really have so much kind of, government money coming through, not only from the Fed, but ultimately DC is going to deliver. I wish DC would have got us a stimulus bill before they went on August vacation, but we are going to see money coming in from DC. I think across the globe, you're seeing this money come into markets. So I think you're going to see rotations. I think there's going to be opportunities. And right now, I really want to buy some of the beaten up stuff because I think that's where the opportunity is. I do think you'll see a pullback in some of these high-flying tech, especially if negative real yields start dissipating.
Peter, thank you so much. Greatly appreciated. Peter Scheer with us with Academy Securities. And you see the real two-part call there, folks, of price lower, yield higher, but with it some equity enthusiasm as well. Lisa, it's just some really good work over the weekend. I give a major shout out to the summaries at Zero Hedge of higher equity prices and with it a higher VIX. That was a bit odd.
Yeah, well, they were talking about some of the technical trades behind that. I'm still struck by what Peter Scheer was saying. The idea, what is potentially poised to go down? Nothing. Absolutely nothing in any sort of significant way. In an era of ample Fed stimulus, it really does strike you how people are not necessarily incentivized to look at the fundamentals or to worry. And I know that if John were here, he would call me an angry bear. And I'm not an angry bear. I'm just trying to find rationality in some of the valuations at a time of unemployment rates where they are, Tom.
The core rationality here is, by all reports, not all that many people on board. What we have is a correlated lift. That's a change from an hour ago as well. Now with yields higher, futures up 8, Dow futures up 40. The VIX, that oddness of being up in value, it's supposed to go lower. You heard Dean Kernett talk about an 18 VIX or even a 16 VIX. Others have even said it could be more aggressively lower. It's not. A 24.30 on the VIX. Finally, yields lift up. This is a big swing from earlier this morning. Now the 10-year yield, 0.73%, the 30-year bond, 1.52%, really getting out. I'll have to look at that chart on the break here on the Bloomberg terminal. Gold flat, 1975 an ounce. We should mention Brent crude, 46.40, and I do so in the monitoring of El Al 971 in for its final approach to Abu Dhabi on this historic moment for Israel and the United Arab Emirates, looking for that plane to land at Abu Dhabi here in a number of moments as well. Stay with us. Lisa Bramlett and Tom Keene. This is Bloomberg, a simulcast.
With the First Word News, I'm Rishika Gupta. President Trump called for law and order in a tweet storm following the death of one of his supporters in Portland, Oregon. The man was killed in a clash between Trump supporters and Black Lives Matter demonstrators. Video showed some members of a Trump caravan that rolled through Portland shooting what appeared to be tear gas and paintballs. Some Democrats say the president encourages unrest because he sees it as a plus for his campaign. And President Trump's intelligence chief is defending his decision to restrict congressional briefings on foreign interference in U.S. elections. John Ratcliffe says he'll primarily brief through written materials, but he ruled out what he called all-member briefings because of the threat of leaks. Democrats say Ratcliffe is only doing President Trump's bidding. And the head of the U.S. Food and Drug Administration promises transparency when it comes to reviewing potential coronavirus vaccines. Stephen Hahn tells Bloomberg that data will dictate what kind of decision is made. President Trump has accused the FDA of slowing vaccine and drug work to hurt him politically. And another sign of improving diplomatic relations in the Middle East. An El Al Israel Airlines plane flew through Saudi Arabian airspace for the first time. The flight was on its way to Abu Dhabi in the United Arab Emirates, which agreed to establish ties with Israel. And the U.S. airline industry is coming up with ways to get more travelers on board. United Airlines has put an end to its much-hated $200 change fee for domestic flights. Meanwhile, American Airlines is adding service to warm weather destinations such as Florida and Mexico. That's after cutting flights in October by 55%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think third quarter GDP is going to be 20% plus annualized. And so we are growing. We're rebounding. The issue is, as long as we've got relatively high levels of virus present, it limits consumers' willingness to engage in a number of industries and activities.
Mr. Kaplan from Dallas there with a great call of a rebound. Everybody pretty much on board with that call, but the mystery of Q4 and Q1 as well. And so much of this happening around a society still adapting to the case and death dynamics of the pandemic. Lisa Bramwitz and Tom Keene, simulcast. Good morning on Bloomberg Radio, Bloomberg Television. Worldwide. Right now, this is a really important interview. She writes in fancy medical journals. Mercedes Carnathan is with Northwestern University, a professor of medicine there with a work out of Stanford and North Carolina over the years, and we're thrilled she could join us. And I don't want to talk fancy medicine, Professor. I want to talk your glorious interview with WLS in Chicago back in June, where someone as knowledgeable as you worried about the sweat of what you do with your kids in this pandemic to get them to socially interact. We are back to school now. Who's doing back to school best?
You know, those questions are really critical, and I find them to be critical across our society in medicine as well as how it contributes to our economy. So the places that are going to do the best with returning to school safely are going to be those locations where the community spread is fairly low. And that's because what we can expect to see within a school is a reflection of what's currently circulating in the community. And so in places such as Florida and Georgia and Texas, which coincidentally opened schools the earliest and tried to open schools amidst high case rates in the community, we see a lot of reports of outbreaks. I'm very hopeful that places such as the Northeast that are opening up early in September will have a different experience because their community burden is lower.
But to your very emotional article for WLS in Chicago, folks, it was really something about the sweat of parents with young children. Like, actually, what do you do? In London, they are begging for people to come back to the office. People out there, Dr. Carnathan, are afraid to go to work. And I want to say, folks, Bloomberg has been phenomenal with me and Lisa about getting us safely to work every day. Pharaoh, they don't give a damn about. But me and Lisa, they've been really, really good about. Dr. Carnathan, are we overdoing this? Should we get back to work and get back to work now?
You know, the challenge of getting back to work is whether or not we can actually find somewhere for young children to go. I have a 5- and 7-year-old who will be home all day with me today. So what I get done is very questionable. And I think businesses feel this and they see this and they want their employees back, and rightly so. However, for the millions of working parents who've got extremely young children who can't stay alone, that's not going to be feasible without some sort of notable intervention.
Dr. Carnathan, at the heart of this question is how much we know about the transmission of COVID-19. Do we have a sense of just how contagious it is, whether you're outside or inside?
Yes, what we know so far, and it's certainly emerging, is that rates of transmission are lower when you're outside because the air droplets, they get dispersed a little more. We know that protecting ourselves wearing masks can prevent the spread in cases where we can't socially distance. And some of those cases are going to be workplaces and they're going to be schools, and as well as hospitals. You think about workers within a hospital setting. We haven't seen the extremely high numbers of infected medical personnel as of late that we saw back in early March. So we know that protective equipment does work. And that's what we're going to need to be able to get people back to work in inside settings.
You know, Tom, the reason why I ask this is because I was out and about in the city over the weekend, and there are tons of people outside, and they're eating at restaurants, and they're not exactly socially distanced, and yet we haven't really seen the upsurge in cases. And some people are questioning whether this is herd immunity. Some people are saying, well, there just isn't the same sort of transmission rate outside. Still a question, Tom.
Lisa, but to your point, and folks, I was a guest of the New York Islanders this weekend, so saw sort of the social life that Lisa lives that I don't live in my sequestered convent. But Lisa, what's so important, I want you to go to Dr. Carnathan on this. Lisa, what is so important here is if we're socializing like that on the street, why can't we socialize like that at the office?
Well, and Dr. Carnathan, have we seen, I mean, to Tom's point, is it safe to be less than 6 feet apart without a mask when you're outside? And is it possible that if you are 6 feet in the office, you're fine?
Well, let me tell you, 6 feet was a number that was generated based on a few experiments and based on prior evidence suggesting an appropriate distance. We know for sure that these respiratory droplets can travel further than 6 feet. You know, when we think about settings such as the choir, the outbreaks that happened in Washington State around a choir practice, or when you're shouting or exercising and breathing heavily, 6 feet isn't going to be sufficient. Whether it's going to be sufficient for eating indoors, that's not entirely clear. I know that I wouldn't roll the dice on that in an indoor setting. And similarly, workplaces are very different. It's very different if you have a private office than if you're working in a cubicle or other shared space.
Dr. Carnathan, I want to switch gears here. We do this on Bloomberg Surveillance. Stay with us, and I'm not going to ask you Cubs, White Sox. That would be too stressful. But
Cubs, maybe.
Okay, but
not that stressful.
Not that stressful. But I do want to talk about what you have been doing. You have been a leader in the framework, the mental framework of women to have a vision of a champion. That's a title from another book that you didn't write. Give us an update right now on what you see in women's sports in framing women to be more intrinsically competitive.
Yeah, you know, that's another favorite of mine as a former athlete and raising young children, one of whom is a girl. I think it's really critically important that we emphasize to women the importance of learning to compete, of not being afraid to beat someone else and being unapologetic about it. You know, the last thing you'd want would be a world leader or a CFO who feels shy or hesitant about beating someone. And I think a lot of those lessons about competition are learned through sports. So I think it's critically important that girls get out there, they get on the field, and they learn to compete. And for everyone, sports isn't going to be their thing, but there are other competitive venues. You know, there's debate, not a sport, but certainly competitive. There are the arts where you need to be your best, and quite often you're going to be ranked by subjective criteria. So having the competition, the competitive spirit, having the focus to be able to practice to be your best, I think that's critically important, especially for women.
Dr. Carnathan, thank you so much. Greatly appreciated. She is a professor at Northwestern University on the pandemic and on some of the social aspects of our path forward as well. Futures up 7, Dow futures up 25, risk on with yields higher today. Real simple. That's where we are with gold, 1975 the ounce. Coming up from T. Rowe Price, Sebastian Page will join us. A good time to catch up. Looking at multi-asset, where will you change in September? This is Bloomberg, a simulcast.
the Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
There is a certain logic in the market doing better than the economy here.
They're going to keep rates at zero for a really long time, maybe forever.
We're looking for a continued improvement in the economy, but the pace will probably slow down now that we've had this quick rebound.
The Fed has been thinking about changing its monetary policy framework for quite some time.
This is a secular downtrend in the dollar that could be 10, 15, 20% over a 2-year period.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance, a simulcast, Bloomberg Radio. Good morning, Boston, New York, Washington. Early morning out in the Bay Area and San Francisco. Stock split Monday for the Bay Area. Good morning on Sirius XM, channel 119 across this nation. And good morning on Bloomberg Television. As well, Lisa, London closed. A bank holiday. Extraordinary.
They know how to do it, right? I mean, where's our bank holiday?
I believe it's coming up. Labor Day's like a week from today. Is that true?
Yeah.
Seems awfully late. I mean, Labor Day that late in September, you know, is it the same kind of Labor Day?
Honestly, what are we all going to be preparing for? The transition from our kids playing video games on their computers to actually going to class on their computers, right? I mean, this uncertainty is so pervasive this time of the year when typically people are getting ready to go back to school and kind of recombobulating themselves for their social lives. Kind of interrupted.
I wonder if back to school is really part of it, folks. Lisa and I, of course, talking about this up, down, and sideways, but we know you all have your stories and your acquaintances as well. And one of the big stories here, of course, for us, Lisa, is back to the office. This is a raging debate. And Lisa, you see it in New York, this great article featuring Jonathan Miller of Miller Samuel in the New York Times this weekend of Facebook and Amazon. Boy, are they betting on the office versus others who are not.
Well, that's the irony here, that you see some of the tech behemoths actually expanding their footprint in places like New York City at a time when other people are writing the obituary for the office. And still others, big companies saying, we're going to prolong the return to the office. We just can't risk it, which raises a bunch of existential questions, but crosswinds here. I'm not seeing the death of the office yet when you look at what the likes of Facebook and Amazon are doing.
We should point to some of you that don't know the Bloomberg way, but it's real simple. When Mr. Bloomberg and Mr. Secunda invented the concept here, it was open office. And I was like, yeah, whatever, Mike. Okay. And I was so wrong. It is amazing, the ferment back and forth. We can go by the food court, and Lisa will whisper to me, you were terrible today. You really were not.
Oh, yeah, that's exactly what I do. That's
happens.
really what I do. For the record, I'm not even going to go there. Anyway, I will say, Tom, you do see a trickle into the city, and people are talking about whether the open office is going to get moved to cubicles, whether you're going to end up with more space and your office. And I hear that you're going to be getting a big office.
You know, I already have the one with a corner view. Farrow and I go back and forth. I've got He's got the corner view of 3rd Avenue and Lex, and I've got the corner view overlooking, the garbage pickup out there.
The lack thereof these days.
I don't know how that worked out. Let's do this, folks. Let me do a data check, and then we've got an extremely important conversation to get your Monday started. There's a lift to the market. What's different here in the last 90 minutes is we're now correlated with fixed income, and that we've got green higher, up 8 points on the SPX, Dow up 32 as well, and we've got fixed income, we've got yields higher. Right now, historic imagery from Abu Dhabi. I believe we have this. This is LL 971. We've been tracking it all morning from Tel Aviv. The distance is New York to Dallas, but it is far more than that. This historic moment is the airlines of Israel and the United Arab Emirates come to agreement. And Lisa, with the American delegation on board, and Kevin Cirilli saying even any and all of American politics suggesting this is a triumph for Mr. Kushner.
Yeah, definitely getting some sort of resolution in the Middle East. But I got to say, Tom, a small moment of calm amid a world very much at odds. I think about China and the move that they made over the weekend with TikTok, basically delaying any deal there. So here is a perhaps victory for Jared Kushner. Still a lot of hot spots remain.
A number of items to discuss here. We'll do this briefly so we can get to Sebastian Page, but within this imagery is the follow-on. Our Kevin Cirilli suggesting that other members of the Persian Gulf community may come to an agreement with Israel. Mr. Kushner, I believe, flying to Bahrain and then Qatar afterwards to continue this dialogue forward. The other idea that's brought up by experts is this is a more forward United States and buttressing up against Chinese investment. You mentioned, Lisa, China and TikTok, and we forget that China looks west and across the Indian Ocean just to the east of Dubai and Abu Dhabi, where they've had some substantial infrastructure developments.
Oh, yeah. And actually, big investments. I mean, if you look at what China has done over the years, they have been one of the biggest lenders to developing markets in the Middle East and elsewhere. And there are ongoing discussions and negotiations about how they're going to handle that role at a time of growing distress economically.
Mr. Kushner now speaking. We'll see if we pick up on that. I'm uncertain what our feed is right now. Riley, help me with that if you can. This is Abu Dhabi again, and this is again, the oil community of UAE, where Dubai is much more visible to those traveling. Again, the good way to partition this is Dubai is Emirates Air and Abu Dhabi is Etihad Air. Mr. Kushner speaking, this historic moment in the United Arab Emirates. Right now, we migrate to a discussion here, and an important discussion of the view forward given equity valuations. And we do that with Sebastian Page of T. Rowe Price. Sebastian, I've got to rip up the script here and go to your hugely anticipated book out in November, Beyond Diversification. This has been a huge theme of my work here recently. Are we over-diversified? Just simply, Sebastian, to the heart of your book, are we too diversified and too diffuse in our potential return?
I don't think we are. In fact, to me, it's very simple. Diversification fails exactly when we need it the most. And we've just lived through this during COVID. Now, you know this, Tom. Most investors know this. But in the book, I argue that the magnitude and the prevalence of the failure of diversification is very much underestimated, even by investment pros. And, you know, every time we get a crisis like the one we just had, you know, big market sell-off, people seem surprised that correlations that are normally in the 0 to 50% range jump to the 90+% range. There are huge investment implications to that. Tom, your question is about, are we over-diversified? I would say I don't think so, but I don't think that we are well diversified either, with a focus on those market sell-offs, those tailed risks, if you will.
Is Mr. Buffett buying into diversification with his 5 trading companies? These are the historic companies of Japan with an absolutely unique, some would say, over-diversified, hyper-risk managed industrial structure. Is that a constructive diversification?
I think he is, because he's getting international diversification, and it's not hear what he's doing with the currency risk, but he's also potentially getting exposure to that factor. And he also remains quite diversified, if you think about it, with his cash buffer. And the whole idea is that when markets sell off, the way you think you're diversified really doesn't play out. And I keep coming back to this idea of downside versus upside diversification. So in Buffett's case, I think here he's increasing what I would call a good aspect of diversification, which is global diversification.
There's also a question of whether bonds provide the same sort of diversification. Just crossing the Bloomberg, I should mention that the German inflation rate fell to negative 0.1% versus the expectation for a rise of 0.1%, giving an ongoing bid to German debt, U.S. Treasuries, this idea of no-flation going forward. Is the 60-40 portfolio dead?
Lisa, we've been debating the role of treasuries in particular as diversifiers in investors' portfolios. We all know that when markets sell off, risk assets sell off together, even if in normal times they have different fundamentals. That leaves you with the duration factor, the role of treasuries in portfolios. When we hit the zero bound, treasuries are not as good a diversifier as you would expect or as you would need them to be. I looked at the nominal yield on the Barclays Global Aggregate this morning, and I know on the show you like to talk about nominal versus real yield, but let's just stick to nominal yield. 91 basis points on my Bloomberg this morning, right? 91 basis points on the Barclays Global Aggregate. So if we get a sell-off, there's high valuations, markets are fragile, we're going through an uncertain recovery. If we get a sell-off, what kind of rally can we get in bonds when the starting yield is 91 basis points?
Well, and that goes to the Warren Buffett bet, the basic diversification as the place to look for income. How much is the currency play the main play here, the look for some sort of haven, and the yen being that stalwart versus U.S. bonds?
Yeah, I think you have to begin to look through asset classes to the underlying factors. So currencies can play a role in diversification, but you also have to begin to think about hedging strategies. You have to begin to think about more dynamic strategies like directly managing your volatility. All these different approaches, including active management and long-short investing, become more important in the portfolio in a world where you don't get much diversification from your treasuries.
Sebastian, too short a visit. We'll have to do this again. And, of course, this autumn we'll have a celebration of his book, Beyond Diversification. Sebastian Page with T. Rowe Price. Too short there as we observed Mr. Kushner speaking in landing in Abu Dhabi and speaking there at an historic moment for Israel and the United Arab Emirates. Lisa, this diversification story is a huge, huge deal. It really cuts both ways. My basic take over the years is we are way, way over diversified.
Well, but also the question is, what does diversification mean? Is it 60-40 or is it investing more in private assets, which a lot of the big houses want people to do? They provide bigger fees. Whether they'll continue to outperform, more of a question.
What is interesting about Mr. Buffett's effort in Japan is that is a maximum diversification, and it is into stronger cash flows and some really serious dividend income growth out of those Japanese trading partners. Speaking of growth, that would be the suburbs. On housing, this is important. Metro Shell coming up. Futures up 7. Good morning.
With the First Word News, I'm Rishka Gupta. Joe Biden has accused President Trump of fanning the flames of hate and violence. Biden spoke after a Trump supporter was shot and killed in Portland, Oregon, after a clash with those protesting the shootings of black men and women by police. Biden called the violence unacceptable. President Trump called his supporters great patriots. He and administration officials blamed the violence in Portland and other cities on Democratic officials. President Trump is praising Shinzo Abe as Japan's greatest prime minister ever. That's according to a White House readout of a call between the two leaders. The president spoke to Abe 2 days after he announced he was resigning for health reasons. President Trump told Abe that the U.S.-Japanese relationship is better than it has ever been. And Warren Buffett's Berkshire Hathaway is betting $6 billion on Japanese trading firms. Buffett has taken stakes in 5 of Japan's biggest trading companies. Amongst them, Mitsubishi and Sumitomo. Shares of all 5 companies rose at least 5% today in Tokyo. And another sign that China's economy is rebounding. One gauge of the services industry hit the highest level this month since early 2018. The manufacturing index slipped slightly, although factories reported that new orders were up. And in Belarus, thousands of protesters again gathered to demonstrate against President Alexander Lukashenko. The European Union is now calling on Lukashenko to hold new elections. The EU has rejected his claims of a landslide victory earlier this month, and they criticise the police crackdown on dissent afterwards. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Thing you can take away from Chair Powell's remarks is this sense of pragmatism. The Fed has undershot its inflation target, undershot its forecast for years. So the idea that somehow this ex-ante preemptive approach is working was a mistake.
closed it lights out this morning, no other way to put it. Some real important monetary discussion there about what Chairman Powell has wrought. And of course, with so much of this, we go back to the Japanese experiment of the last 20 or 30 years. And of course, the idea of good deflation, bad deflation, and such. The world this morning reacts to the celebration of Mr. Buffett's 90th birthday, where he looked back to the Meiji Restoration of Japan and how they put together conglomerates or multinationals in Japan. It is a decidedly different path from before World War II and certainly from 1950 and 1955 for their trading houses. There used to be 12. Now there's somewhere in the vicinity of 5 or 6. Catherine Shiglinski got up to speed on this for us very quickly. She covers Berkshire Hathaway. Catherine, how much commitment has Mr. Buffett made? You've told us before there's a huge, huge wall of cash. How much of that wall of cash did he use to acquire Japan?
Technically just a sliver. So the stakes were valued at more than $6 billion, but he has a record of $146 billion of cash that he's working with. So while it's just a sliver, I do think that this deal for these stakes in some of the Japanese trading firms is really monumental in terms of how Berkshire's thinking about investments and where they're looking.
And what's so important here, Catherine, if you look, folks, at any of the websites of these trading houses, there's, I want to be clear, only a Korean equivalent, and maybe that's it. There's no American equivalent to the breadth and the depth of their ownership, their joint ventures, their cross-asset negotiations. Catherine, is this a bet on these companies, or is it a bet on the future of Japan?
Well, I think given how big these companies are and their wide range of industries that they're in, take Mitsubishi, for example, they control one of Japan's biggest convenience store chains, and many of these companies operate hotels, sell tires, and do a lot with energy and commodities. So I think in a way, he's really getting a full sampling of the Japanese economy.
Well, Warren Buffett is Mr. America. He's always talked about the dynamism of the American economy. A lot of his investments, most of them, are focused here. This is a huge shift from that perspective, too. Catherine, from your reporting, does this indicate that Warren Buffett is moving away from the United States, both in terms of economic growth as well as perhaps the currency?
Well, I think this definitely signifies that he's willing to, and he's talked about this before, about how he wanted to do more deals abroad, but people didn't know Berkshire quite as much globally as they might in the U.S. But he's been willing to sort of dabble abroad before. They've bought, a German motorcycle equipment company. They have an Israeli company, and he talked about Korean investments before. But I think this really signifies that he's willing to put a lot of money abroad now. He's met some of his investing deputies. Todd Combs has done some deals for payment companies in Brazil with investments there. So I think this is sort of an evolution of Berkshire. They've gotten really big in the U.S. They have a lot of money to put to work, and now they sort of just need to find places where they can get good deals.
The other aspect of this deal that a lot of people find fascinating is the commodity aspect, especially following on the Dominion Energy investment, this idea that Warren Buffett likes commodities here. How much is that really the takeaway?
I think it definitely signifies, this is an area that he knows well. I mean, Berkshire itself owns, a sprawling energy operation. He's been willing to put a lot of money to work in a financing deal for Occidental. So I think it just at least signifies that he knows this area. So while he might be stepping outside of his circle of competence in terms of geography, he's at least sort of sticking with it in some ways with the type of firm here.
Catherine, in the time that we have with you, he is a vital 90 years old. He's really made that clear in the last 6 months or so. Review with us right now Mr. Buffett's best outcome for the future of Berkshire Hathaway. Are the troops on board to take over one day?
They are. And, I think moves like this where, Buffett is sort of stepping outside of what might be sort of his tried and true path, I think it really signifies that he's opening up Berkshire so that whoever takes over, whether it's, Greg Abel, Ajit Jain, or any of his deputies, whoever takes Abel over will be able to then kind of make more deals that are a little different, maybe, a little outside of what Buffett would have normally done, because, it reinforces to investors that Buffett himself was willing to kind of expand his horizons.
That Apple trade worked out, huh, Catherine? I mean, Mr. Buffett gets the mother of all stock splits here.
Yeah, agreed. And I think back in 2016, everyone thought he was getting into Apple really late, and I think he just confirmed to us in recent years that he actually was not late to the game with that bet.
Catherine, thank you so much. Catherine Shiglinski working through Sunday on this really interesting and important story as well.
Yeah.
You really wonder, Lisa, what the jumpstart will be to international investment. This is a kind of event that can be changed.
Yeah, well, I will say that the Bloomberg just posting an article looking at a 1977 letter that Warren Buffett wrote, talking about what types of investments he likes and sort of the criteria. And to give you a sense of perhaps some of the calculus that went into this investment, he said, we want the business to be one that we can understand. We want them to have favorable long-term prospects, operated by honest and competent people. And that was something that was also cited, this idea that Warren Buffett can count on the accounting practices of Japan. And that sort of raises some big flags, especially about China, given some of the controversy with IPOs in the United States, and available at a very attractive price. So, these are some of the criteria he's held to since at least 1977, and these brokerages seem to fit into each of them.
I could say to people, you can go to the Bloomberg, and what's so wonderful about looking at all the Asian markets, but particularly the Japanese market with the confusion of currency, is in one click, you can take the portfolio over to U.S. dollars. And Lisa, that's a good and beautiful thing.
Well, and it raises a question also about the haven asset or the haven aspect of the dollar, right? I mean, this idea that if you want diversification in some sort of hedge against downside risk, a lot of people coming out and saying perhaps the yen gives that to you more so now than the dollar.
Well, we'll see. And the yen 105 handle here, 105.93, weaker Japanese yen today. Euro, I'm watching 119.39, not out to a 120, but that really is important. And then what you do, folks, is you take the dollar out and you look at the pro pair, the euro yen, and that's clearly indicating today's stronger euro, weaker Japanese yen, a 125 number of yen per euro. That moves out to 126.48. Again, weaker yen today. In the markets, it's sure now with running green on the screen. NASDAQ, what a shock, doing better than the others on a percentage basis. The 10-year yield, a basis point move, 0.73. Really quite distant from where we were pre-Powell. And the 30-year bond is a solid 12 basis points higher than where we were last week as well. 2-10 spread really has my attention. 60 basis points. That's a real breakout to a steeper yield curve. What are you doing about real estate? We're all moving. Lisa Abramowitz is moving to the farms of the Adirondacks. Mitch Rochelle next on Tupper Lake Real Estate. Good morning.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. hospital. Al salir, nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramwitz and Tom Keene. John Farrow off today. Futures mixed here now. Red and green on the screen. Yields are higher. Out a basis point on the 10-year, 0.74, and a 30-year bond, 1.51. A little bit of real yield angst here. Negative 1.06 on the real yield. Get your attention. Right now, we are going to turn our attention to one of the only two topics that are out there. One of them is clearly back to school, and the other's back to office. Hugely qualified is Mitchell Rochelle, a housing market analyst, and we're thrilled that he could join us today. Mitch, I want to talk about the New York Times article this weekend that everybody within the tri-state area read, and we welcome you on Bloomberg Radio and Bloomberg Television, our simulcast, and that Mitch Rochelle's house to the north has gone up 242% since Memorial Day. Is it really that crazy, Mitch, on the demand to leave the city, any city in America, and move to the suburbs?
It's that crazy. I don't know if it's up 200%. If it's up 200%, there'd be movers walking behind me right now. But it's up pretty strong. And literally, I live in Westchester, northern Westchester County. Houses that went on the market late for the home buying season, so it was a couple of months ago as opposed to several months ago, already gone. And there is a flood of people coming from the city and actually coming from other cities. One of my neighbors sold a house to somebody from Seattle. So people are desperately trying to get out of cities, and they want the suburbs.
Mitch, all my radar is up on this wave. The vaccine clicks in. We get back to go. The Malkins of Empire State Realty, Jeff Blau over related. They're like, you're out of your minds. Come back to the city. You know, what do you feel? Are we going to be back in the city?
I think it's the sort of perfect storm of the civil unrest challenges that are in cities with the high density and then the uncertainty of education for children that is really creating the angst about whether or not to live in the city. If you look at people buying houses, all of the searches over the last month or so are for one bedroom larger than the searches a year ago. So people are looking for that extra bedroom, whether it be for a home office, whether it be for a home classroom, and home purchases are permanent decisions, or at least longer term decisions. So I think people are looking long term and looking just beyond when the vaccine comes.
Mitch, how does this wave out of the cities, how does it compare to, say, September 11th, 2001, and other periods where people decried the loss of a city and the death of New York?
Yeah, I think, Lisa, some of those in hindsight were more temporary, and I'm not suggesting that this is permanent, but this is certainly longer term. If you just look at the decisions that are being made by office tenants, by residential tenants, about where they want to do business, where they want to live. They seem to be making very long-term decisions around something that, when we look at it over time, may have been a short-term thing. But this is much longer than, I'd say, 9/11, stock market crashes, and other things that have happened that have slowed down the New York economy and gotten people to move elsewhere.
Mitch, there's this incredible dissonance with an economy, at least from the labor market standpoint, in tatters. The idea that we have a double-digit unemployment rate, people losing their jobs at a record pace, and yet you have housing prices that are soaring, and you have the price of lumber more than tripling since just early April. At what point does this start to look frothy to you?
It feels a little frothy, Lisa, but I think it's basically simple supply and demand. You threw two macro econ concepts at me right there with unemployment, but I think it is supply and demand. We're not making enough new supply. You mentioned lumber, of new housing to meet the demand. And the fact of the matter is, if you go back 10 years, the cumulative household formations, and that's when children move out of their parents' house statistically, are about 3 million, in excess of the new supply of housing that we've created. So we just have a backlog of a lack of supply. That's going to continue to drive, with this high demand, can drive prices higher.
Mitch, your career is around the commercial aspect here. Not a trite question, is the office dead? But what do you perceive is going to be almost the societal future of commercial real estate?
I think, Tom, there is still demand for the office. I think what you're going to see happen in the near term is that we're going to sort of spread out the offices. When you talk to CEOs and COOs and CFOs, I just dropped the whole C-suite on you. When you talk to them about about all of their needs going forward, roughly half of them say we need more space to socially distance, and the other half say we have too much space. I think the more is interesting, because what you're going to see is companies move out of the one building model that they may be in and move into multiple buildings. Lisa, you mentioned 9/11. I think that's what also happened after 9/11. You didn't want to be concentrated in one place. What that does do, if people are moving to the suburbs, is create a lot of demand for suburban office. And I think we're going to see that kind of thing popping up very soon.
So what's the symbolism of Facebook taking out Moynihan across from Madison Square Garden? I mean, I get it. That's a one-off, and it's a statement that they're making about technology. But can you extrapolate forward to the digital dominance and their desire to keep the kids happy?
You know, one of the things I'm having a hard time reconciling also, Tom, is companies' decisions to not return to the workplace well beyond when we'd even expect a vaccine to be there. And some of the tech names have said, don't come back until the end of 2021. Those are the shocks that you're seeing in the commercial office space, because they don't know how to deal with those companies that are viewed as leaders and whether or not other companies are going to follow. So I think the bigger trends are going to be, as we get closer to a vaccine or on the other side of a vaccine, what do employers do vis-a-vis their people in terms of bringing them back? We were joking before the break. I think all of us are hankering to get back to the office. So I think the workers want to get back. It's whether or not, from a safety perspective, employers are comfortable doing that.
So that's on the office demand side. On the valuation side, there's also a question of who the buyers will be. And I know you have extensive experience with international investors. How much are international investors sticking with their investments in the big U.S. cities in commercial real estate?
I think, Lisa, it's also tied to the fact that, at least hopefully for a long time, the U.S. is a reserve currency. So when you look at the way foreign investors allocate capital, they buy U.S. treasuries. When they want more yield, they buy U.S. Other investments and hard assets in particular that generate yield. One of the things we've looked at over time is the fact that the more volatile the planet is, the more investors like hard assets, and real estate's a great income-producing asset. So I think they're not looking at it purely on the fundamentals. I think they're looking at it as a long-term wealth preservation play, and real estate over the long term has done better than stocks and bonds in some respects. So I think that they're going to stay put with real estate.
Are shopping malls and hotels still capital preservation plays?
I think that's a bigger challenge. I think they're in two different baskets. There's a transactional nature of the lodging industry that will slowly creep back. I think retail, there's more of a fundamental issue, which is we are over-retailed. We have 10 times more retail space in the United States than Japan does on a per capita basis. So we're over-retailed, and I think that this is one of the tough blows to realize that we just have too much space.
Mr. Rochelle, Chris Ferrone, the great trend-based technical strategist at Stratega, has just put out a note, and he said the message is reflationary. Can real estate participate in a pending Powell reflation?
The question is there enough demand for higher rents when, at least on the commercial side, when businesses are struggling? I think clearly apartment rents will be inflationary because of the supply and demand dynamic, but I question whether or not businesses have the capacity to pay inflated rents over time.
Exactly. This is the heart of the matter, folks. Is you gotta make more money. Some of the realities of New York City real estate is the incomes aren't there to support the rents, and I mean the landlords. I mean, is that where we are right now? Is the wage growth's not there and the revenue growth is not there for businesses?
I think it's the revenue growth. And Tom, we've talked on the air in the past about the fact that you have all these for rent signs in street front retail across New York City. And I think ultimately landlords are going to have to lower their asking price to get tenants in if they want to fill the space. And I think there isn't enough commerce to support that high rent ask. So I think that you're going to see falling rent prices or a lot more for rent signs.
Is it the same story on the residential side? How much further can we expect rents and values to fall in Manhattan real estate?
Yeah, I think, Lisa, that you're going to see rents fall. There are, high quality apartments in New York City have enjoyed a 90+% occupancy level for a long time, which has given landlords the ability to raise rents. I think landlords are going to have to give that back and give a lot of concessions to get folks in. But just remember, every year there's a new crop of seniors graduating from college that are dying to live in New York City, and they can, four of them can fill up a one-bedroom a year ago. Maybe four of them fill up a two-bedroom, and that's the new model. So I think the demand is there. The question is, are the jobs going to be there? And are those kids, when they graduate from college this spring, going to be working at home still or working in an office?
Well, that's dead on. I mean, Mitch, that's the way Lisa and I are living right now in New York City. It's like four of us in a bedroom. You squeeze in.
Four of us in a bedroom? I don't know about you, Tom. What's going on in there?
You make some, oh, you're here? Who'd you bring over? Great. Okay. Mitch Rochelle, thank you so much. Look forward to speaking to you in the coming weeks as well. Lisa, it's a huge deal. It's really coast to coast. It's not just about New York.
Yeah, and there's a question in New York, I know. I read a recent article that people prioritizing outdoor space, apartments that have, a 2-inch by 2-inch terrace, are going for a substantially higher value than those that don't have that.
Yeah, and I really, for all of you nationwide in this simulcast, I really got to say this New York Times article this weekend with John Miller in it was huge. The zeitgeist of it was huge, frantic bidding wars.
Yeah, although people have written off New York City. I mean, the tone of it was basically saying, that basically you've got, urban flight. This is a return to the suburban glory days, and the jury is still out. Still, that is a major issue that people are
I'd pay
debating.
Attention to private enterprise employers like Mr. Bezos, Mr. Zuckerberg, and dare I say, Mr. Bloomberg as well for the commitment to New York City. Futures up 4. They were up more earlier. But nevertheless, a little bit of a lift here to the market. The VIX, really odd here. This has to do with some serious short dynamics. 1.54 points up on the VIX, 24.50. Yields are higher. Stay with us on Bloomberg Radio, Bloomberg Television. We do call it a simulcast. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. President Trump called for law and order in a tweet storm following the death of one of his supporters in Portland, Oregon. The man was killed in a clash between Trump supporters and Black Lives Matter demonstrators. Video showed some members of a Trump caravan that rolled through Portland shooting what appeared to be tear gas and paintballs. Some Democrats say the president encourages unrest because he sees it as a plus for his campaign. President Trump's intelligence chief is defending his decision to restrict congressional briefings on foreign interference in U.S. elections. John Ratcliffe says he'll primarily brief through written materials, but he ruled out what he called all-member briefings because of the threat of leaks. Democrats say Ratcliffe is only doing President Trump's bidding. And the head of the U.S. Food and Drug Administration promises transparency when it comes to reviewing potential coronavirus vaccines. Stephen Hahn tells Bloomberg that data will dictate what kind of decision is made. President Trump has accused the FDA of slowing vaccine and drug work to hurt him politically. And another sign of improving diplomatic relations in the Middle East. The first commercial flight from Israel has landed in the United Arab Emirates. To get there, the plane flew through Saudi Arabian airspace. Another first for El Al Airlines. Israel and the UAE have agreed to formally establish diplomatic relations. And legendary college basketball coach John Thompson has died. That's according to ESPN. Thompson coached Georgetown and became the first black coach to win an NCAA title when the team won in 1984. Amongst the stars he developed, Patrick Ewing and Alonzo Mourning. John Thompson was 78. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed, but the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
posturing game here. I expect that we will get something done, but there is some risk to the consumer if we don't get the last bill over the finish line. Over the finish line.
Mr. Chivarone, Federated Hermes, we're thrilled that he could be with us here talking about the markets. Futures up 4, Dow futures up 23. Right now, and this is going to be a lot of fun, is Michael Dow's, who is iconic at Wilson. And all you need to know is if it's a grass court, there's a certain ball, or a clay court like the French Open, a certain ball. And then there's hardcourt tennis, and Wilson and Michael Dow's have owned that for over 4 decades. You use Wilson tennis balls, you do nothing else, and you believe in innovation. He was so good at it, the United States Tennis Association dragged him pre-pandemic over into their combine to keep tennis magic going. And he's been given a pandemic. We're thrilled that Mr. Dow's could join us with Ms. Azarenka in the background screaming every third hit as well. Michael, congratulations on keeping it going. What have you learned from the other sports about what not to do at this U.S. Open?
Well, not to take it lightly, and Tom and Lisa, thanks for having me on the show today. And it is true, Victoria's back here hitting away, so hopefully it's not too noisy. But really,
there you go.
What we learned is we've got to take this serious and never take anything for granted, and have great partnership and teamwork with the pro tours, but more importantly, the government, right? The federal government, the city of New York, and the state of government. There was a lot of moving parts, and we had to pull all this together to assure a safe and healthy tournament.
There are jump conditions for tennis. It's always been that kind of sport. There was a guy named James Connors who had a Wilson T2000 racket a few years ago and leveled the way the sport was played. Are you at a point of innovation now? Is tennis ready for a new jump condition of skill and speed?
Oh, I think the game has completely evolved over the years. The amount of athleticism is incredible. But having said that, it's a sport for all. If you think about it, tennis is one of the few sports you can start when you're 5 or 6 years old, and you can play all the way into your 80s. We host tournaments from 10 and unders to 80 and over. So it's not only the greatest athletes in the world, but it's all people can play our sport.
Mike, it's interesting when you think about tennis, you think of 2 people at opposite sides of the court. They're going to be naturally socially distanced. What have some of the challenges been for you to bring some of these tennis professionals, the legends of the world, together at a time of the raging pandemic that you really hadn't thought about before?
Yeah, it was a lot of international cooperation and working with the pro tours. If you think about it, we have players from over 60 countries. So the dynamics we had to work with are quite a bit different than the professional leagues here in the U.S. So we had to get collaboration from several governments in Europe, not just to get the athletes in, but to assure we can get them back to Europe after the tournament. And again, we had to work with the city of New York and the state of New York to make sure our health protocols were buttoned down and perfect to run this tournament.
So, Mike, there's been a lot of controversy over crowd noise. Tom Keene has demonstrated his own version of crowd noise. And in tennis, it's polite clapping and things like that. Are you just going to have it silent, or are you going to engage in some sort of crowd environment that's manufactured?
Personally, I'm a fan of crowd noise, so the more crowd noise we have, the better. But for this year, obviously without fans on site, we've partnered with one of our partners, IBM, to come up with taking crowd noise from last year. They run their AI magic to it, and this year it's going to simulate the crowd noise from last year. So we think it's going to be pretty unique versus some of what some of the other sports have done at this point.
Mike, how are you going to get America back into tennis? You've got Miss Azarenka of Belarus batting the ball around behind you, making a horrific racket. Her hero, Steffi Graf, et cetera, But there's this crying need to get America re-engaged in what is now an international sport. How do you do it?
Couldn't completely agree more. Tennis is so important to U.S. To U.S. tennis. We have to get it going. But what I'm excited about, in a strange way, the pandemic could be what Billie Jean King and Bonnie Riggs were for tennis in the 70s. The pandemic could be...
in what way?
So we just got some statistics back that tennis participation in the U.S. for entry-level players has doubled in the last 3 months. So if you think about it, when you were in quarantine, you didn't get any exercise, you didn't socialize with anyone, and you didn't have really a lot of intellectual stimulation. As you go out to tennis courts, you can have all those benefits. We saw mass merchant tennis racket sales for entry-level tennis rackets nearly double in the last 3 months. So we see tennis coming out of this potentially with a big boom again.
Well, Mike, to that point, have you seen a pretty big financial hit from the lack of live games and games that could be broadcast? Or are you seeing actually a boom on the other side because of the ability to do this sport with some social distancing?
Yeah, I mean, as far as the industry, it's coming back strong after being shut down for about 60, 90 days. And as I mentioned, entry-level tennis is where it's really taking off. Specific to the USTA, it is a challenge this year. Without fans, our revenue, or net income, I should say, will be down about 80%. So it's a big hit for us this year. But even with that, we've had some reserves, fortunately, in our lines of credit. We're able to continue and still offer pretty equivalent prize money to last year and keep the operation going.
Michael, the only way we're going to keep this going is next time, instead of Azarenka, I want John McEnroe in the background warming up, and that'll make it good. Mr. Dowse is with the United States Tennis Association, our Chief Executive Officer and Executive Director. Michael, thank you so much. Lisa, that was great. And to your point about the inherent social distancing, that's got to be good.
You want somebody throwing a tennis racket behind him. That's what you're looking for, isn't it?
And this weekend, that would be McEnroe, yeah. But this weekend, Lisa, I mean, somebody observed with Mike DeWine out in Ohio, Ohio State is not playing football, but high schools in Ohio are playing football.
Yeah, well,
and these things are bizarre.
And you also wonder, I mean, we talk about whether the office is going to return. You have to wonder also about the fate of some of these college athletic towns, the college football towns that live and die by the football season, or all of these colleges that bring in all their revenue based on their teams. And how much is that going to get revived? Are we going to see tennis, the U.S. Open, as the next sort of Super Bowl? I don't know about that.
Well, we'll have to see. Let's get back to the markets here as we close out. It's a big day. Futures up 3, Dow futures up 21. Really interested to see what tech does, and particularly the split news as well. Lisa, what are you looking at?
I'm watching the difference that we're seeing with equity performance and credit performance. We haven't seen credit perform as well as equities this past month, and I think that's fascinating. Even as you see all-time highs in the S&P, you just see spreads grind a little tighter, but not that big of a deal, which raises questions about whether people are concerned about the fundamentals, still showing discretion at a time when other people are saying that there's some signs of froth in the equity space.
Well, not your normal August. It's supposed to be a quiet August. It is not, and of course, summer truncated longer this year, Labor Day a week from now. Again, British markets are closed today for the bank holiday. With that said, I'll say it'll be a most interesting week as well, and many people recalibrating, being behind in the markets, and how do you catch up? We'll try to do that here with Chris Marangi of Gabelli Funds. You'll look for that in the next hour on Bloomberg Surveillance on radio. Looking forward to that. Thank you for your many comments on our simulcast on Bloomberg Television, on Bloomberg Radio. It's been a great experiment through the summer, and we are going to keep it going as well. Again, futures up 3, Dow futures up 24, curve steepening this morning. Please stay with us. This is Bloomberg. Good morning.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City for our viewers worldwide, I'm Taylor Riggs, in for Jonathan Farrow. The countdown to the open starts right now. And we go right into it. We begin with the big issue, stocks on track for their 5th consecutive month of gains. Investors wondering how much more room is left to run.
The markets make new highs. Markets making new highs every day.
Seeing the Russell 2000 perform better.
We're going to continue to see certain things that are going to support the market going forward. Very little volatility.
The COVID recovery efforts that we're seeing.
The data remains quite good. Hyper loose monetary policy.
But it shouldn't be at record highs given the amount of uncertainty.
Volatility comes back in because of the election.
You have the election coming up. We're still in the midst of a pandemic.
The fragility of the American consumer.
There's a substantial number of people that are still unemployed.
We don't know when we're going to get another fiscal stimulus package.
A lot of hope embedded in the market here that there's some sort of V-shaped economic recovery. There is room to run.
There's a lot of euphoria and exuberance built into this market right now.
Let's bring in Bloomberg Scarlet Fu to break down the price action last trading day of August, and yet fresh record highs every day.
Yeah, we've been here before, and we're getting ready to close out August and what's been a blockbuster summer. You mentioned 5 straight months of gains for the S&P, Dow, and NASDAQ. Within the S&P, all 11 industry groups climbing during that period in the past 5 months, led by consumer discretionary, followed by technology. Now, for those looking for a 6th month of gains, keep in mind that September is historically weak, especially in an election year. Now, of course, the recent gains we've seen are not limited to the U.S. We've seen them overseas as well. And the overseas price action overnight, at least, is fairly encouraging. Chinese data shows services industries rose to a 2-year high. Warren Buffett, of course, giving a big vote of confidence in Japan by buying stakes in 5 of the biggest trading firms there. We've got lighter volume in Europe because of the holiday in the UK. Today, a couple of drivers to keep an eye on. Apple and Tesla's stock splits take effect today, of course. Matt Milley of Miller Tabak actually worries that this could be become a sell the news kind of event, and we have seen futures dip lower. Cyclicals are gaining as well. We're talking airlines and cruise line operators. The question really is, Taylor, how much of this is momentum versus earnings? And Nick Hollis of DataTrex says a big driver for the equity gains during the second quarter earnings season was the element of surprise. Earnings came in higher than expected, not unusual, they usually do, but S&P 500 profits beat by 23% on average. And according to Hollis, that is the most on record. He points out that when you look at the second half earnings estimates and 2021 estimates, they haven't really been coming down. They haven't been going up either. They haven't really been adjusted, even though analysts are clearly too bearish on second quarter numbers. So he says U.S. stocks can continue rallying as long as investors believe that analysts are behind the curve when it comes to raising earnings estimates and on price targets. And in that respect, this rally is like every other cyclical rally we've seen.
Well, Scarlet Fu, thank you there. And you'll be back with us in just a few moments. Meanwhile, Michael Purvis of Talbacking Capital Advisor is saying equities might still have more room to run. He's writing, quote, volatility bulls and market bears have to bear in mind one overarching factor. The Fed will backstop the market by suppressing rates. They can continue to act with shock and awe. And Michael joins us now on the phone. And Michael, I think you hit it right there on the head of what you and every other strategist is saying, is that especially after the announcement last week, the Fed is going to backstop this market.
Yeah, that's right. I mean, I think they're doing something that they've never done before, which is that they've all has kind of shifted from a data-dependent mode where he was, throughout, 2018, for example. He was very obviously reacting to data when he said far from neutral and just after that record ISM print. And now the Fed is shifting into this sort of a different mode, which seems to be that, look, we're not thinking about raising interest rates, and in the June FOMC, the forecast for interest rates were 0% through 2022, even though the median GDP estimates were higher than the Bloomberg consensus estimates. And so I think they're sort of saying, maybe we'll get a vaccine, but we're still keeping rates low. And that not only keeps interest rates low, it also keeps interest rate volatility low. So if you make the assumption that those low rates and low rate volatility are in place for, the next couple of years, you really have to be long equities as a second order impact of that. So I think that's, what you're seeing here. Just to complement what Nick, you were just referencing Nick Colas, and, on the earnings front, he's absolutely right that, the companies are putting in some nice beats here. But, the complement is, okay, 2021, 2022, take a discount to whatever the consensus estimates are or whatever your estimates are, and look at that peak price earnings ratio that you might be paying today, or say 36.50, which is my year-end price target. Look at that earnings yield, the inverse of the price earnings ratio, relative to what the 10-year Treasury yield is likely to be over the next couple of years. If you make the assumption that it's somewhere between 50 and 80 basis points on the 10-year, you can still buy equities up to 36, 37, 3,800 pretty easily, and even more so for the NASDAQ.
I'm curious on that, Michael. When you take a look at that relative value, you mentioned a dividend yield, the earnings yield, and then 75, 80 basis points on the 10-year Treasury. At what rate higher do you think we need to get up in yield on Treasuries to start to make that shift look attractive? Because then, as we know, the Fed might cap rates on the 10-year and push them back down lower.
Well, I would say if the 10-year gets to say 1%.
Yeah, Michael, we're trying to figure out your connection here. We're losing you just a little bit. Can you hear me?
Hear you fine.
Stand near a window for us, Michael, so we can try to reestablish your connection here. I want to get back to Michael. Let's try to reestablish that connection there on the phone. In the meantime, let me go to Abigail Doolittle. Abigail, you've been with us and listening to this really the whole time. What has been your take really on the health and the breadth amidst all of these record highs that we continue to see here?
Well, Taylor, it's very funny because technically we are a bit overstretched for some of these markets. On the other hand, after the Federal Reserve's extraordinary move last week, it suggests that investors, the healthy response that we saw for stocks last week, are embracing the idea that the Fed is lower for longer, that support is there, and there isn't a lot of panic per se. What you do want to watch, though, are some of the other asset classes, such as the yen. There was a bit of a rally there last week after Abe did resign, but that seemed to be more the idea that perhaps somebody less accommodative may be put in place as opposed to a haven bid. But if you do start to see some sort of a haven pickup, it could be of concern. Also concern, as you know, Taylor, volatility. The VIX curve is spiking higher for September, October, November. It is well above 30 right now, right around 25, suggesting into the election. We have the election. We also have the idea that the economy could falter a little bit as stimulus has not been passed as quickly as some had hoped for. That is, a reason for some investors to be concerned. But right now, the last day of August, as we head into Labor Day next Monday, it seems as though a little bit of a cruise control for the bulls, Taylor.
Thank you there. And Abigail Doolittle, we're going to continue to have you stay with us. I think we've reestablished that connection with Michael Purvis. So, Michael, thank you for bearing with us in the midst of this brave new world in which we live. And I want to bring you back on some of the volatility analysis that you are so superb at. August is supposed to be a volatile month. We didn't quite see that. How are you looking at volatility and equity returns as we head into Q4?
Right. So we were discussing that, that I am very constructive on the market in the broader term. Right now, within the volatility markets, if you look at the VIX, for example, the VIX premium to realized volatility, with actual volatility, is that it's extraordinarily high. Is the top 1%, 50 years. So
yeah. Well, Michael Purvis, we're so sorry. We thank you so much there for your time. We're still having some connection problems, of course, as we all deal with phone issues, of course, as no one is here in studio with me. So super grateful there, Michael Purvis over at Talbach Capital Advisors. And stay with us because coming up, Kathy Jones, Charles Schwab, Chief Fixed Income Strategist, will be joining us next. As you can see there, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Where you don't tighten preemptively just because you think the economy is getting to the full employment. You actually wait to see whether the low unemployment rate actually translates into rising inflation before you actually pay the monetary policy. So it is a meaningful shift.
It's possible that it will take a while to get to 2%. I don't view this policy articulation as a radical change. It's a reaffirmation of the way we've been operating.
That was former New York Fed President Bill Dudley and Dallas Fed President Robert Kaplan defending the Fed's approach to setting monetary policy. And Federal Reserve Vice Chair Richard Clarida speaking right now. Bloomberg's Mike McKee, our Bloomberg International Economics and Policy correspondent, joining us now with the highlights from that speech. Michael, really in the last 10 minutes, getting some new headlines out of Mr. Clarida.
Yes, Rich Clarida is making some news this morning. The headline news for people on trading desks: no negative rates, no yield curve control, and a possible change to their economic forecasting methodology. In his text, the vice chairman says, "We do not see negative policy rates as an attractive policy option. And as for targeting the yield curve, the potential benefits from such an approach may be modest. Most of my colleagues judged that yield caps and targets were not warranted in the current environment, but should remain an option if there are major change in economic circumstances. Now that the new policy is in place, Clarida goes on to say they will turn to what they call the Survey of Economic Projections. The committee, he says, can assess possible refinements to our SEP with the aim of reaching a decision on any potential changes by the end of the year. Now, most of the survey is pretty straightforward. Where do they think growth, unemployment, and inflation are going? Which probably means that what they're talking about is the possibility of getting rid of the dot plot. It's been very controversial, and there isn't a lot of support for it on the committee. So that may be something to keep an eye on in the coming months. We will look for more clues as to what they will do with a lot of Fed speak this week, Taylor. You look at the calendar, and this is the biggest week of the month. Not only do we have a significant number of Fed officials speaking, but this is the week for the IHS market ISM numbers, the PMI numbers, the ISM numbers, which will get a lot of play on Tuesday and Thursday. And, of course, Friday is Jobs Day. And I just want to point out one chart here. You can see the importance of Friday's report in it. The gap between the number of people who are getting unemployment benefits, that's the white line, the number of jobs being created, the gold line there, fewer jobs each month. The number of benefit recipients remains extraordinarily high. So unless that gap starts to close, we've got a long-term problem, and the Fed isn't going to be talking about raising interest rates anytime soon.
Yeah, we learned that at least 5 years or so, or some of what the strategists are speculating. Michael McKee, thank you there. Vanguard senior rate strategist Dan Mathias thinks the Fed will need to help in raising inflation, saying that, quote, to go meaningfully higher from here in terms of market pricing of inflation, you need to see the real economy cooperate. It's not just the Fed talking, the economy's got to be walking. Joining us now, Kathy Jones of Charles Schwab. Kathy, great to have you. Your thoughts here on the shift that we saw last week with Powell. How much did that change the game for you?
I don't think that it was record-breaking change from the Fed. I don't think it was something that wasn't anticipated. It was widely anticipated. And I do think it's more of an articulation of where they've been headed for quite some time. Even under Fed Chair Yellen, they were pushing forward on the idea that the labor market had further to go before tightening. So I think this is a continuation of that and maybe just a verification of that. But it does tell me that the Fed's not going to be concerned about negative real interest rates. It tells me that we could see some further steepening of the yield curve and certainly more narrowing of those credit spreads, because it is sort of a permission to the market to push forward on risk.
Kathy, I want to talk about yield curve steepening before we get into credit, because you hit on two very key issues right there. Within the yield curve steepening, we have seen a little bit of that in the last few days. Yeah, we hear from Rich Clarida, Vice Chairman, this morning, saying that forward guidance and bond buying continue to be effective. How much then is the Fed going to cap yields on the long end by purchasing some long end bonds and perhaps not engaging in some of that yield curve steepening that we've been seeing?
I think that as long as the move up at the long end is gradual and it's in sync with the change in the economy, in other words, if we continue to get some good economic data indicating a steady rebound in growth, then I don't think that they're going to intervene particularly heavily at the long end of the curve. So some steepening in the curve, if it's consistent with economic growth, is okay. The real issue I think the Fed might face somewhere down the road is sort of losing control of the long end, where people start to discount, sort of this heavy supply coming, inflation coming, that maybe the Fed's reaction function would be slow to address. Then yield curve control would probably be employed. But between now and then, I think they'll be relatively steady in the way they approach it.
Well, and you're sort of hinting at what Clarida said, where he said yield caps are complicated to implement and complicated to communicate. Kathy, if they're not thinking of yield caps yet on the long end, how much do you see that starting to happen on the short end, particularly if rates do start to drift higher, at least within, let's say, 5 years or so?
Well, 5 years is a long time in this market, but I would say that we're probably looking at the Fed on hold at least for 2-3 years here, and that'll probably anchor short rates out to about the 3 to 5 year area for quite some time. So we're not looking for much movement at the short end at all.
Kathy, you also made some very interesting comments about credit spreads continuing to tighten. And I've seen that, of course, within investment grade, within high yield. Do you see further spread compression?
Yeah, we do. Not necessarily wanting to chase it. We've been on up in credit quality camp for quite some time because we're concerned about the deterioration in some of the fundamentals, the risk of downgrades and higher defaults in the high yield space. So within both investment grade and within high yield, we want to stay up in credit quality. But I think that the door is open to further spread tightening. I don't see what's going to stand in the way at this stage of the game unless the economy really takes a downturn later in the year, something that we're not counting on, but I think is a risk to the market in general.
And it's interesting, within high yield, we have stories out this morning talking about how CCC companies, more of the junkiest of the junk, are having a hard time borrowing. I'm wondering, within your credit analysis, if you're starting to see some cracks within the lowest rated of the junk, and what sort of contagion impacts that may have as you start to then go up the credit scale.
It shouldn't have too much contagion in this environment as long as the economy holds up. But it's right, I think, that the lowest of the low are having difficulty raising more money because, frankly, solvency is getting to be an issue with some of these companies. They have liquidity, but they don't have necessarily the path to solvency. So we expect that to happen. I don't look for contagion unless the economy turns down again, and then we could see a risk-off environment that could ripple throughout the market.
Kathy, I'm curious how you fold in some analysis, and most are assuming further dollar weakness. If you too see that, and then the impact it has on your rate markets.
Yeah, we are looking for further dollar weakness. We think we started a downtrend that might last a couple of years. The negative real interest rates, the Fed's very dovish stance that they've articulated, and the fact that the dollar had really been coming off of an 8 to 10 year bull market leaves quite a bit of room for it to decline from here. And to us, that says that one of the areas that we could explore would be emerging market bonds. And I know, even though we've been kind of cautious about excessive risk, one place we haven't seen outperformance is in EM bonds. So those spreads are actually still elevated relative to pre-pandemic levels. There's a lot of risk embedded in EM right now, but we think that it's an opportunity if you're staying the right credits to pick up some carry. The average yield is over 4%, and some capital gains as well from spread narrowing.
And is that solely call on further dollar weakness, or is there real growth that you're starting to see within those EM credits?
Well, it's mostly dollar weakness. It's the fact that those currencies have really gotten beaten up pretty badly, so there's some room for them to rally. And it's really selective in terms of growth. So in some areas, we're seeing that growth bounce back. In other areas, it's still very, very challenging. So again, being selective about where you go in EM or being very diversified is a plus.
Kathy, finally here, how are you thinking about folding in an analysis of fiscal stimulus? We're also hearing reports that while the Fed can do everything in their power to keep rates low, to encourage lending, it really is up to the financial institutions to lend that money or not. If they're not lending the money that the Fed is urging them to do, how is the role of fiscal stimulus then coming into play?
Yeah, we think fiscal stimulus is really important, and really disappointed that Congress wasn't able to get a deal done earlier in the summer, hoping that they get something done. I think in particular, aid to state and local governments is very important because we're already seeing layoffs in local government and cutbacks in services. That's going to accelerate the downtrend in the economy and employment, or at least delay the rebound in employment. Also, we've lost a lot of income already from losing those extra benefits on the unemployment side. If we continue to move in that direction, there's actually a real risk of a double-dip recession towards the end of the year. So very concerned that fiscal policy is stalled right now. And I think it's important that Congress come up with something sooner rather than later.
Yeah, well, we're all waiting for that sooner rather than later. Kathy Jones, thank you for joining us. And coming up, the analyst action you need to know. It's next in our morning calls. And later, Barry Knapp of Ironside's macroeconomic advisors joining us at the opening bell. As you can see here in the market, trying to extend further record gains on these markets of 6 straight week of gains. Some of that starting to roll over. We are still, though, on track for our 5th month of gains here within these equity markets. Bond markets also getting a little bit of a lift up in yields, further exacerbating some of the moves that we saw yesterday and last week. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Citigroup upgrading Beyond Meat to neutral with a $141 price target. The analyst citing the stock's attractive valuation and the company's recently launched direct-to-consumer site. And next up, Stephens upgrading CSX to overweight with a $93 price target. The analyst naming a number of catalysts in the freight market, all adding up to a favorable near-term setup. And finally, JP Morgan turning more negative on GE heading into the second half of the year. The analyst withdrawing his $5 price target, saying the company's enterprise value reveals there is little equity value with no visibility. And coming up, Barry Knapp of Ironside Macroeconomics Advisors joins us for the opening bell. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow, just moments away from the start of trading, and we're rolling over just a little bit within the Dow and the S&P. Still, though, on track for a fifth straight gain of monthly moves, I should say, but no surprise here. Tech continues to lead the way. We're up 30 points, 0.25% within the tech markets. Flipping up the board, we'll see where the bond markets are heading. You're seeing a little bit of a lift up. Well, we're going to call it mostly in change here, just 73 basis points on the 10-year. Dollar weakness is the name of the game, but you're getting some risk assets and some lift up within the crude markets. I want to go on over to the markets desk. Bloomberg's Abigail Doolittle joins us now with some movers. Abigail.
Hi there, Taylor. Well, we have lots of outsized movers here to start with. Just taking a look at Philips, we have the shares of the electronics company down about 4%. They have pre-announced the downside, essentially cutting their full year outlook, and this has to do with the cancellation of a contract for almost 31,000 ventilators by the U.S. You can see those shares lower. Soaring, though, take a look at Genworth. The insurance company is said to have a Chinese bidder with financing, so that stock is up nearly 40%. But really taking the cake is Immune Therapeutics, up 171%. Nestle bid $34.50 per share. So you can see the stock is basically there, suggesting that investors think the deal will get done. So interesting, this company has a peanut allergy treatment. Of course, Nestle has products with peanuts, including Butterfinger. So perhaps there's going to be some sort of combination there, but certainly interesting. And then GameStop up nearly 10%. RC Ventures reports a 9% stake in the company. And RC Ventures, of course, is run by the founder of GameStop, so we do have some strength there. And then let's take a look at stock split makeovers, Taylor, because we are looking at Tesla and Apple. Tesla at this point unchanged in the pre-market, up slightly. Apple, however, up about 1.7%. So interesting to now see Tesla as a $440 stock. Apple is about $125. Both of these stocks up huge since the splits were announced. As you know, value is not created, but it's created lots of momentum and interest in these big name stocks, Taylor. And right now, not a sell the news event, at least yet.
Well, perhaps not fundamental, but certainly psychological on a day like today. Bloomberg's Abigail Doolittle, thank you. And tech dominance front and center this month. The NASDAQ outperforming the Russell 2000 by 7 percentage points over the last 2 weeks alone. Academy's Peter Cheer giving bears some hope, saying tech's outperformance may be short-lived.
I do think you'll see a pullback in some of these high-flying tech, especially if negative real yields start dissipating. We're going to see a rotation in the market away from some of the big tech leaders. We're going to see less negative yields as yields start creeping higher. And then we might see that finally that rotation into the, stocks that have underwhelmed for the past 2 months.
Let's bring in Bloomberg's Scarlett Fu for more. Scarlett, really? Rotation out of tech?
We've heard that before, haven't we, Taylor? Look, right now we're in a market where the big keep getting bigger and the winners keep winning. The most expensive stocks have the best returns. Our producer, Pete DeTerras, broke it down and ranked the S&P 500's return by average market cap. And the top performing 10% slice of the index has an average market cap of $200 billion. And then you see a big drop off to the second decile, $96 billion. But the trend is pretty clear here. And of course, Apple is the biggest of them all. Its 4-for-1 stock split today doesn't change its value, as Abigail was just telling us. But with a market cap of $2.1 trillion, Apple is equivalent to 88% of the entire Russell 2000 small cap index. And its fundamentals, you could say, justify the returns. Apple beat its earnings estimate in the second quarter by 24%. That's the SURP function on the Bloomberg, and that is the biggest beat since early 2012. Now, it's for that reason that Bloomberg's Kriti Gupta calls tech stocks the global safety bid. We know that they have strong balance sheets and lots of cash. Apple, for instance, $193 billion in cash and equivalents. Alphabet, $121 billion. Clearly steady earnings growth with a global profile and, frankly, lack of competition around the world, which is why regulators around the world are taking such a close look. Demand for these kinds of companies and the major indexes is also likely coming from overseas. Cameron Kreis of Bloomberg's MLive blog crunched the numbers, and he found most of the gains in the S&P 500 futures are happening between midnight and 4 a.m. Some people call it the witching hours, but those are Asian trading hours. And overseas investors seem to be a key source of demand, with apparently lots of carryover into U.S. trading hours, at least for the last couple of months.
Well, tech is the new defensive sector. Scarlett Fu, thank you there for your hard work. Barry Knapp of Ironside Macroeconomics staying wary of the relentless bull market, writing, quote, "We're in the early stages of a new business cycle when equity market returns are generally strongest. We will keep looking around for something to disrupt the rally, but we have to admit it has been pretty impressive." And Barry joins us now. Barry, something to disrupt this market. Do you see that? Because the Fed has pretty much said they're not going to let anything disrupt this market.
Well, I do think the issue around the Fed, and we wrote about this a few weeks ago, is that once you get started with these asset purchase programs, it's not, it's really the delta or the rate of change of the asset purchase programs when that starts to decelerate that causes disruptions in the market. So, you know, if you think back to 2018, for example, when their balance sheet was contracting, we had two serious shocks higher in real rates. In January, real 10-year yields went up 30 basis points, and then we had Volmageddon in February. In September, we had a similar move higher in 10-year TIPS yields or real interest rates, and then we had the QT tightening, and it all comes because they can't keep buying at the same pace. So it's certainly possible as we get into the fall that large issuance could overwhelm the Fed purchases and they just start to slow a bit and we get these shocks. You know, 3 weeks ago, it looked like we were getting one of those and then it sort of started to fade. But once the Fed gets disengaged in the market, they almost have to keep buying at the same rate in order to, you know, prevent these various shocks. So that's certainly one potential, you know, cause for a market disruption. The presidential election looked like it was going to, you know, be a significant risk as well. But as I'm sure everyone in the reader or the watchers have seen, the betting markets have tightened to almost no spread between the two candidates. And so with the vol markets priced as high as they are, it's not clear that's a disruption either. So I've been bullish from the lows, and I keep looking for a reason to, you know, to get bearish or start to take some risk off the table. We downgraded tech a week ago. So far, that's not really working either. We didn't downgrade it to an underweight. I've been overweight tech for almost a decade, but, you know, we took it to a market weight thinking, you know, we were vulnerable there as well. But so far, you know, the market continues to defy us and just grind higher.
So talk to me a little bit about that, because in your note, you said that we're in the strongest area of this market rally, right? Coming out of a recession. Typically, that's, I think, when you would go to value, to some cyclicals, get away from some of the defensiveness, as you said, taking off the overweight of tech. Curious if you're thinking that's where we are, but within values and cyclicals, how sensitive do you have to be to rate-sensitive markets as well?
Yeah, I've never really loved the value versus growth argument because for the most part over the last 10 years, it's really been tech versus financials. There were real reasons to be underweight financials for most of last business cycle. We had regulatory policy working at cross purposes with monetary policy. That's